It would be kind of weird to spend the next 10 minutes before my live stream kicks off talking. And I'm going to apologize for the weirdness of this, but howdy. Welcome back to Dion Talk. Why Class C properties? It would be really weird to spend the next 10 minutes talking about why I chose Class C, why I continue to invest in Class C, why Class C is my preferred investment category, without explaining what Class C was. It's not like there's a scorecard that goes around that realtors go and then agents and investors go, it's a Class B property, or it's a Class D house in a Class B area. That's not how it works. It's undefined. It's in the mind. It's like beauty, in the mind of the beholder. So everyone has kind of a loose definition on a sliding scale of what the classes of properties are. Class A is your high end, your most expensive. So generally, if you're thinking of Scottsdale, Arizona with your big compound houses, or it can be an apartment. Class A can be an apartment. If you have a doorman who doesn't have to stand behind plexiglass, you're probably in a Class A area. The schools in Class A and B have the biggest budget, so people usually say they're the best school districts because they had the most money to spend on resources and teachers to attract teachers that were more competitive. So Class A is generally houses, high-end apartments. It's not small multifamily. Class B is still higher end, so you'll have granite countertops, higher end finishes in the houses. Generally, houses, not so much small multifamily, though it can be. You generally won't find too many Class B areas of small multifamily. What you'll find is a small multifamily property in a Class B area around other houses. Could be gated communities, though usually they don't have a gate, a person manning the gate. And you feel very safe walking around those neighborhoods. More infrastructure, more lights at night, that kind of thing. Class C is where your average human being lives, in my opinion. Your person who makes somewhere between $40,000 and $110,000 generally lives in this area. You can go there safely. The cops can go there alone in their car. They don't have to go partnered up. It's generally going to be next to places like Panera Bread, or not quite industrial areas, but not quite, next to the train station, next to the airport. It's more, think rural housing areas, generally where I invest. Class D is more of the, I don't want to say lower end. It does tend to be the cheaper properties because it's not competitive for rents. You have higher turnover because people are usually in that neighborhood are trying to get out. And if they can financially, they do that. If not, they stay. And you have a worse element. Police have to go there partnered up. A lot of people call them war zones. If you're not comfortable going into a neighborhood to collect the rents by yourself, then I really, as a person, wouldn't feel comfortable sending a property manager into an area to collect the rents if it's not safe. So really, it's just kind of in your mind. A, B, C, D, A being the most expensive, D being the least expensive. And you kind of group it together in there. But why Class C? I've heard a lot of people talk about Class A because you have tenants with more money tend to have less issues, which I don't agree with. But it's like the meme that goes around in real estate, where the $500 client sends a paragraph about they've sent some money and all of the risk they're taking using your business, and then down here the $50,000 client just says, it's one text, says money sent. It's easier sometimes to deal with higher end expenses when it comes to people, is the mindset where some people choose Class A. That's not my reason. I didn't choose Class C for mindset. Originally, I chose Class C for some of the same reasons that I've heard other content creators talk about this. So I've heard Zuber talk about Class C and Matt the Lumberjack Landlord talk about Class C. I've talked about Class C. And I've said these two main reasons why I like to invest in Class C, or why I think it's logical to invest in Class C. And then after owning them for a while, I realized subconsciously there was another reason that I was investing in Class C. So it's kind of like I was investing in Class C for these two reasons, and they made sense. And I've heard other people say these reasons. So I thought, okay, they're smart investors. They're successful. They've been doing this twice as long as I have. Their portfolios are huge compared to mine. So my thought process is probably accurate if it's lining up with theirs. And then I had this other thought, and I ran it by both of them, and they hadn't thought of it. So I hadn't thought of it until years later either. But to me, it makes me sleep better at night, knowing that this is an actual reason why I continue to invest in Class C neighborhoods. The first reason that most investors usually say why they like Class C is, you'll hear this almost verbatim. They'll say, in a recession, people can down select from A to B, B to C, but very few people will go from A, B, or C down to D. Not too many people want to move into a war zone. So in rough economic times, when people lose their job, you might have someone go from A to C or B to C. So there's more demand in bad economic times. Totally makes sense. I've only heard one person ever say, Jonathan Twomley actually said that he prefers Class A for some other reasons. And he talked about how in a recession there would be more demand for Class A, and I didn't understand it. And it's actually backed up with factual data that this is the reason I think Class C is one of the safer investments, is because since we've started tracking the data in 1940, you can look at the charts, rents have never market-wide gone down once ever in a 5-year period. Like you can have local areas that will go down around Detroit. If the car manufacturers move away, rents can tank. In around Silicon Valley, if the tech industry blows up with the dot-com crash, your rents can tank. But market-wide rents have never gone down, except in 2009, Class A markets dipped enough to make it look like rents kind of came down, but it wasn't in C or B areas, it was in A areas. So again, kind of validates in rough economic times, more people can down select from A to B, B to C, but they won't go much lower. So there's more demand for C. That is one of the reasons I actually said, here's why I invest in Class C. The second is the scarcity mindset. And this is one more that I've said than I've heard other people say, was I purchased a Class C property because if I had a Class A property where the mortgage was $3,000 and the rent was $4,500 or $5,000 and the tenant skips out or doesn't pay or doesn't moves, I have to cover a mortgage of $3,000. But if I have a mortgage that's $1,300 and the tenant's paying $2,000, and then the tenant skips out or moves or doesn't pay, I have to cover a mortgage of $1,300. So based on my own size of my portfolio when first starting out, it made sense to purchase the properties that had a smaller mortgage for my own security. As the portfolio grew, that would make less and less sense because you have more and more tenants, sources of income snowball to cover when you have a mortgage that you might have to cover yourself. So those are the two main reasons that most people usually talk about. Here's why I buy Class C properties. But here's the real reason. And this was underlying my thought process from before I became an investor. It was why I looked at tenants kind of like I looked at myself, the types of jobs I had. And here is the main reason why Class C for me is the property I'm going to continue to invest in. And I didn't think of this until recently, like quantify it, to put it into words, to put it into a video. If you have a tenant in a Class A or B neighborhood, and they're making decent money, like I talked about, a $3,000 mortgage, so $4,500, $5,000 rent coming in, for $4,500 or $5,000 rent, in my mind, is a fairly expensive rental, unless you have like 5 bedrooms and massive family that you're trying to do. But I mean, just a rental that costs that much might be normal in your area. In my area, that's kind of expensive. I think my biggest rent is $24.50, I think, is my largest rent on one unit. I think I never thought that before, but yeah, that's accurate. So I have a couple there, but that's as high as they've gone. So $4,500, $5,000 coming in, and that tenant loses their job. Let's say they are a lawyer and they messed up and got charged with something, got their reputation burned, lost their job, or they work in IT. And the IT industry does what it's doing this year, where Facebook and Zillow and all of these tech companies are talking about layoffs of 8,000, 13,000, 12,000, 10,000, all these people getting laid off in that industry. And so that industry as a sector is laying off. So they were probably making $150,000, $200,000 a year to afford this $4,500, $5,000 a month rent. What is that person going to do working in IT or tech? What lateral kind of position in work can they go to that pays the same? So in rough economic times, or when a sector is hit, if you have a tenant that is paying that much in rent and earning that much in income, you're probably going to deal with a tenant turnover. They're probably going to move. Probably not going to be an eviction. They'll probably go, yeah, we're going to move back with our parents, or we're going to down select from A or B down to C, right? They're going to move out of your property. But if you have a Class C property and the rent is $1,500, what is my lowest? $1,460 right now is my lowest, to $2,450 is my house. So that's the spectrum of my Class C properties. I have one that's a B minus that I owned before I was an investor, but I prefer to buy Class C, mostly because of the rent bracket. I was a police officer in 2008 and got laid off because of the recession. So as a police officer, your income isn't $150,000 a year, $200,000 a year. So it's really not that hard to replace when you get laid off. I went and drove a truck for Oak Harbor Freight Lines and doubled my income. Like, I made more money because I got laid off. And so if your average tenant paying $1,500 to $2,000 a month is making $20 an hour compared to $80 an hour or $100 an hour in whatever industry the Class B or Class A renter is doing, or married couple is doing, and then you have a divorce in an A, they're probably both going to move to places they can afford. But in a C, if there's a divorce, one moves out. The other one usually qualifies to rent the place or moves in a roommate. So in 10 years plus, I always take out my first year because of the tenant I had that was a mistake that I did because it was a friend and no lease and I wasn't educated. So if I take out that first tenant, in over 10 years of investing, I have had a total of 4 tenant turnovers. One purchased a house earlier this year. I actually said, here's the agent, here's the lender, let me help you do this. Like, I tried to help my tenants find a way to buy, and I couldn't talk them into buying a small multifamily. They bought a house. Another one inherited a house, one passed away, and one moved out of the area. So I've had one tenant literally move out of the area. The other one's either purchased, died, or got a house from inheritance. So very limited tenant turnover. And in those 10 years, several of my tenants have lost their jobs, changed jobs, had divorces in the family. They don't move. They don't need to. They don't need to downgrade. They're in a bracket of rent that if you're making $20 an hour and your company just fires you out of nowhere, and McDonald's is hiring at $18 an hour, it's not that hard to find a job doing something in your area that makes an equivalent amount of money. It's the $50+ an hour type of jobs where, yes, if you work at Boeing and Boeing does a layoff, you can probably find another aerospace company. But if you're working in IT and the tech industry takes a hit like they are this year, and you have a Class A or B rental, you're probably going to experience some tenant turnover. That has been my main reason for sticking with Class C properties. I'll take that out, put on a separate video, because there are people who will never click on a 2-hour video. I hope that makes sense. Class A, B, C, D, it's kind of a moving target. And I often hear people like the lumberjack landlord say he wants a Class C property in a Class B area that he then upgrades. Well, the way you grade a property and the way you grade a neighborhood are very different. I think a property can be the finishes, the amount of rehab it needs, the layout, right? But the neighborhood, you can have a mansion on McNeeley Avenue in Tacoma. You can't go there safely. Doesn't matter how nice a place it is. That area is not safe, right? So I wouldn't say that you can have a Class A property in a Class D neighborhood. But I totally get what Matt's saying when he talks about he wants a place. What's the common theory? Buy the worst house on the street, because you have so much to move up, your appreciation is going to scale and the houses around you. Totally makes sense. But that's why, for me, I prefer Class C. For the first 2 reasons are legitimate. Those are actual reasons. I think there is more demand in worse economic times, and I can carry the note if I need to, right? Especially when just starting out. when I wasn't making a lot of money. And because the job I went to after law enforcement, where I doubled my income, that company went on strike and it went away too. And I started working at the CDL school making $17 an hour. So $17 an hour, thinking if my tenant in my house doesn't pay, I have to pay for my apartment and the house, and I could swing it. But that would be a month where I wouldn't save a penny, right? Yes, I was working overtime, and yes, I was playing World of Warcraft and selling things online to make money. But let me get to the hellos here. I see Millennial Mike popped in. So howdy, Mike. What's up? Amigo, like the video, folks. Yes, so this is one of the things that I don't like about the layout of YouTube, because I do this on like Zuber's channel or Matt's or Mike's when I'm watching their live streams, is you have to close the chat, hit the like, open the chat. And it's like 3 steps to just hit a like button. When YouTube is like, okay, the like button says that there's interaction on the video. So why put a barrier to entry on the likes? Let me get to these. And I appreciate everybody showing up for a live stream on Tuesdays. And I almost said this during the Three Amigos recordings this morning with Zuber and Matt, but they're not nerds. And I know that most 99.9% of the people watching are not nerds either. So the 0.01% people who might understand what I'm about to say would get it, but they wouldn't get it in the Three Amigos stuff. The monumental amount of self-sacrifice that is happening, to sound completely arrogant for a second. World of Warcraft came out with an expansion yesterday. And normally when that happens in the gaming world, I would take a week off of work. When Skyrim VR came out, I took a week off of work. I literally went to work and said, hey, you guys don't call me, don't text me, don't nothing until next week, unless the place is on fire. Just like at work with my tenants, fire, flood, or blood, then you can call me. So I'm going to try to do this live stream like I'm not jonesing. But it's the first expansion in like 2 years. So Chester, howdy. And there was somebody who came in early, like 10 minutes early, and put in a few questions and then took them back out. They were good questions. I wish I'd taken a screenshot. I would have got to them. If you ever see a live stream coming up for Zuber's listed for tomorrow, which I don't think he usually does, but Lumberjack and me, we usually try to put him in earlier that day or the day before so that people know, yes, this week it's happening. It's my 54th week in a row, not missing a Tuesday. Put the questions in before the live stream comes up, because one of the struggles with a live stream is this is good content in my mind. This is what I watch. I watch all the live streams I can because I want to know, what do investors keep in top of mind awareness? Not what do they have to research, but what do they just know? Because if you're going to make a 5 or 10 second decision on a 30-year commitment to hundreds of thousands of dollars without doing research, there are certain things that we just need to know. So if you do a live stream and there are no questions, it's a waste of everyone's time. But if questions come in that spark the conversation, that makes the golden nugget of information drop that the content creator wouldn't have even known to share, it's great. So in the future, if you see a live stream coming on any of the REI Avengers, so Millennial Mike's channel, Lumberjack's, mine, if you see a live stream coming up, feel free to drop a question in. We will do the opening 10 minutes to give YouTube a minute to say, hey, world, there's a live stream going on, right? And then we'll get to those questions. So Chester, why Class C and not BC borderline? So since it's such a mindset thing, what you think is BC borderline might be what I think is C. An example is, a lot of people would say Class C is where there's a street where there's all duplexes, because in their mind, they just say all small multifamily means a bunch of renters. So that's Class C. I have one rental that's a duplex in a group of duplexes. All of my other Class C properties are small multifamily in an area of single family houses. My fourplex is next to single families all the way around, and then a lawn care service on the other side of the street. So other than one, I've never purchased in what people would say Class C is small multifamily. So I'm probably Class C, borderline Class B, because there are some nicer houses around mine. Like one of them has a all brick full facade in the front. I don't want to say mansion, but larger house, probably 7,000 square feet. So not huge, but big enough. But it's still to me Class C because of the way the neighborhood is. Dividend Dave, howdy. Amanda Turner, howdy. Do you have any resources to share how to find what areas have more crime other than the Tacoma and Pierce County? I already know to stay away from McKinley and proximity on Pac Highway 99. So where the primarily used public transit that isn't commuters is, I would avoid. A lot of counties, it can be very different. Your sheriffs can put up a crime thing, but it's very manipulated data. When I was a police officer, which was a billion years ago now, not all of the data was very accurate. So I'd be kind of careful with that. I think talk to property managers in the area and say, what areas would you like to manage in? What areas would you like to avoid? Go to local REI meetups. People in that area will know where to avoid. And once you find an investor in an area that invests similar to you, you can actually share things and say, what do you think of this area? You might not have to share the exact address or deal, but you could say, what do you know about this area? And it could be something like, I have a rental in Lakewood that has a ton of demand. The Joint Base Lewis McChord is close to there. It's really close to the ferries. It's in a great area, and the town is kind of divided. There is actors and actresses from the 70s and 80s, like Linda Evans had these mansions in one section, and then there's some areas where you just don't go to because it was the element of people who are attracted to be close to a military base that aren't associated with the military. There's just a certain element that's around every base like that. So I would say Lakewood's a great place to invest because of demand, and if you know the few areas to avoid. But the city of Lakewood has a stupid policy where your property is going to be inspected by somebody who's never been trained, who has no clue what a rental should be, who comes to your house and makes your tenants change out a Disney princess light switch cover because it wasn't the same as the other ones. Tells me that the opposite ends of a duplex, the one that has had soffit repair, has to be painted the same color. They are not visible from any street at the same time because of the shape of the building. So I would say that is the last rental I'm ever going to own in the city of Lakewood. Unless you talk to local investors, you won't find that kind of stuff out. So I don't know of a resource that's accurate that says here's where the real crimes are happening, other than word of mouth with kind of locals. It's kind of why we talk about when you pick a market, make sure you have boots on the ground of someone you trust. Like they're going to be at your funeral kind of trust. Tom, howdy. I appreciate Tom won one of the hour phone call. We did a Zoom. Millennial Mike was there and we kind of went through a thing. Let me know how that went for you, Tom. All-Nighter Hider, howdy. Adam, howdy. Did you purposefully buy all C class, or did you just realize all of your properties are C class and realize the benefits after the fact? So I purposefully bought C class. Part of it was because I knew I could afford the mortgage if the tenants weren't when I was starting to build my portfolio. And then later I continued to buy class C. It's the area I'm most comfortable living in. I don't like fancy areas. I don't like the people that are in fancy areas. I don't like war zones, of course. Yeah, so it could be just because I'm most comfortable there, but it's also, I know, and I've experienced it, tenants in Class C properties, when they lose a job, they don't just stop paying their rent. Literally, unemployment is enough to pay your rent when you're in that kind of bracket. It's not enough to pay a $4,500 a month, even maximum here in Washington, which is $910 a week or something like that. Comes close, but doesn't quite just cover that. But if you're paying $1,500 a month, your unemployment is probably closer to $500 or $600 at that point, but it's enough to cover your rent. All-Nighter Hider wrapping up work. Nice. Levi, howdy. Flash of Light, howdy. How do you conduct a search for strictly Class C? In most areas, it's going to be by price. If you know an area average and you see properties that are listed significantly higher that don't offer things like an ADU or a triplex or fourplex or more units, you can usually just say that's higher end by price. Knowing the neighborhoods is key. It's another one of the reasons why so many people talk about don't try to invest in 3 or 4 markets at the same time. It's too much data. Too much. We don't have the bandwidth to understand the things that are different from one neighborhood to the other. Strictly Class C. That's a good question, Tom. That's actually a great question because I haven't figured that one out. I invest in 2 counties, Pierce and Thurston counties in Washington state. So I'm transparent about all my numbers and stuff. And I know I'm not creating competition because this is a kind of high cost of living area and a lot of people aren't looking for that. But like I said, McKinley Avenue and anywhere within 1 or 2 blocks all the way up and down Pacific Highway, Highway 7 and through Spanaway in this area, I would avoid, right? I wouldn't even do like a 20 or 30% cash on cash return. I would still avoid it because I'm not able to go there safely to collect rent and I wouldn't feel comfortable sending a property manager there. So I would avoid even a great deal in those areas. It's often easier to get a great deal in a high turnover area because you're getting the higher turnover. So I do the search and then I look at the map and mentally have sectioned out areas where I just completely disregard in a matter of seconds, which is going to remind me that Friday we're doing a members only live stream. This week I'll get it set up and I did a poll on YouTube. The first one was we looked at my emails from my agents saying, here's the searches, here's what my research results are, here's what I think when I open these properties. Then the next one we did Dividend Dave, so thanks for being transparent with us, Dave. And we went in, looked at his market, his emails, and did the same thing. This week what we're going to do is build a binder. That strategy where tenants actually request a rent increase. It's not going to be a super exciting, not going to be answering, like just random questions. It's going to be, here's exactly how I would build a binder for someone's market. So it'll be members only and Zoom, and then somebody in the Zoom, which we haven't chosen yet. Somebody has to be willing to share. Give me the search in your area. Where is your property located? Let's look up what area average rents are. Let's look what imagery I would want it to look like and which properties I would pick and choose to share with the tenant, because you don't want to make them all look too expensive, because then if the tenant looks at places that look cheaper, it looks like you're being disingenuous. And so like we're going to go through all of that and make a binder. That'll be Friday. Michelle, Matt, howdy. Beth, howdy. How are you? Beth Traverso Real Estate Group. Hi, Dion. For myself, I prefer C-class type homes in A-B areas. Nice. So there was it's 2 different kind of grading things. You want the property that you can bring up the most in the area that you invest in. So I'm kind of the opposite, not the opposite. I kind of skip out on that. I want in Class C that needs no work. But if you're like you, Beth, your husband is in construction, right? So you buy the places, you guys put in the work. Matt has a team, buys a place, puts in the work. Zuber has teams in place. I'm just the lazy guy that doesn't want to do any work. But that's probably the most effective way to do it, is buy the place, the worst place in the better area. So you'd want, in my situation, if I had half the drive that you guys do, it would be in a C area that the building would look like a D property. Like it looks like it was from a war zone, and then I would do the work to bring it up to C. So it's a great strategy. Peter, howdy. Never heard of these letter category neighborhoods. So it's makes sense now. Cool. Yeah. So I usually refer people to, I did one video with the 3 amigos, but Peter, Brandon Turner from BiggerPockets did a write-up. So if you just Google Brandon Turner classes of neighborhoods, and you'll see it. It's a pretty good write-up, much more articulate and eloquent than what I blurted out on this is what I think A to D is. So you'll hear a lot of people reference it, and it again, it's not clearly defined. Nobody has an exact, breakdown of how it works, other than most expensive, least expensive, somewhere in between. Mark, financial firefighter, howdy, aloha. You prefer B or C homes in C-class neighborhoods with the potential of becoming a B-class neighborhood. So you're looking for the upswing, properties that are going to get better. I like that. So a lot of people watch migration trends. If you know construction's happening, an example that where insider trading is completely legal in real estate and encouraged is in Lacey, Washington. There was a company called Ostrom's Mushroom Farm, and for about 5 years they were going through a legal battle with the city, which I think went the wrong way. But the mushroom farm was there, and then the city grew around it, and then the city said, "Hey, you smell," and they went to war with Ostrom. There's probably more to it than that, but this is what the outsiders see. And the city won the case, and Ostrom's had to move. I think they moved to Yakima or somewhere, out of Lacey. So I purchased a duplex there. I took all the resources I could, made sure I found a duplex there. And in the next 2 years, rents doubled. Appreciation was about 40% on my duplex in 2 years there. So that doesn't suck. legal insider trading. I knew that the place was going to get better. And it wasn't that it wasn't going to change types of neighborhoods. It was a big, huge detractor to price and rents was going away. Tom, howdy. Thank you for the super chat. I appreciate that. And the difference between class B, C, or D. It's not, to me, so much the difference in rents with D is the problem. I think D rents and C rents sometimes aren't very different because there's kind of a bottom end for most rents in an area, especially what will housing authority pay in an area average. A lot of people think low income housing, that ends up, it's very different. So Section 8 and low income housing are very different animals. Section 8 is for fixed income. Low income is for low income, right? So you'll get a lot more D low income type housing. So you kind of have a base. Around a base, that was an accidental, but around a base, you'll have BAH, basic allowance for housing, kind of sets rents. The difference for me is with class D, you're going to have a lot more tenant turnover. In D areas, you're less likely to have washer dryer hookups. You're less likely to have garages. It's like all of these things that just cause tenant turnover. With class C and class B, you have less tenant turnover. But a lot more class B renters become home buyers, especially when we're being priced out right now with higher rates and prices not dropping as fast as they could. And as a matter of fact, in the last reading that Michael Zuber was going over, median home prices went up 0.1%. So they're not even dropping, even though rates have doubled in the last 6 to 9 months. So people in class C with the incomes to rent in class C are being priced out of buying. So more renters for class C, less turnover. Class B, you still might have people who are buying because they can afford it. Doesn't mean it's the best financial decision that they make, but no, like my tenant, I tried to say, look, if you buy a duplex, you're going to pay almost the same, maybe 5% different than what you're paying for your single family house. And now look what you'd be paying on the mortgage on the other side. Just wouldn't have it. Just, it's not for everybody. I totally get it. So it's the turnover that matters more than the rent amount, and class B rents are going to be higher than class C or D. So C or D might be closer to the same, but that class B rent, because you have higher end appliances, better finishes on the property. Again, one of the reasons why I avoided it is I can handle the class C mortgage easier than I can handle the B. Now it wouldn't matter, but the first 5-6 years of investing, a tenant not paying would have stretched the budget, dipped into reserves. With class C, with class B, it could have been debilitating. It could have been beyond my ability without going into bad debt to handle it. So maybe it's a thing where you start with C, get that stable portfolio built up, and then move to B and A. Dividend Day. Thank you for the super chat. I appreciate it. Binder strategy. So excited. No more coffee. Exactly. Yeah, we're going to do the binder this Friday. We're going to go over, like one-on-one on a Zoom. This is how I would build it. This is what it would look like. This is what I would print, and then go through the conversation with how it should go with that tenant. I'm going to get up to some other questions, but I want to get to Peter's because I know that people don't always stay with lives very long. Like the average is like 12 minutes or so, but I appreciate and I love the people who stay for the whole thing. How long have I been doing real estate for? So for a full version, either on my channel, there's a short video, but the very first one, so just scroll to the very back. The very first video explains my timeline. But BiggerPockets episode 448 has my whole story on there too. So if you like BiggerPockets, that was my episode where I go through it all. I got laid off from the police department in 2008, spent 2009 landing on my feet, getting a job with a driving company that went on strike, getting to the CDL school. But 10 and 11, I saved. I actually moved from my house into an apartment, rented out the house. So since 2010, I've been saving for investing. My first purchase was around 12, 13, then 14, 15. 15, it was 2 years between the first one and the second one, and then a year and a half, and then paid off a mortgage, which was a mistake, and then purchased a fourplex, second house hack. So about 12 years of investing. At the 8-year mark, I reached financial freedom, financial independence. Work was optional. Worked for 4 more years because I loved my job. I was the president of a truck driving school, running 5 campuses at the end. But eventually, in July of this year, time freedom went out, and I've been retired since July. And looking back, I probably should have done it 4 years ago. Lost my spot in the chat here. Yes, I'll let her look at Beth taking a step further. Yes, yeah, no doubt. Anna K, howdy. Thanks for joining us. Angelina, howdy. Levi, when using the binder strategy, what would you say if the tenant suggested keeping rent the same? Since it's never happened, because here's the example with the binder strategy. And Peter, if you're new to the channel, please check that out. It's a strategy that gets the tenants to ask me to raise the rent. And it would work in reverse. A tenant can use the binder strategy to get the owner to lower the rent. The idea is if you buy a property or if you have a tenant in place and the rent is far below area average, it's very easy to raise the rent if you educate the tenant. We call it the binder because you actually make a 3-ring binder, right? Levi, you're going to have the first page is the property and how much you paid, so the tenant's aware of what your property taxes and insurance are based on. The next page is an area map with pinpoints of all the rentals of the same number of units in the area. And then each page after that is printouts of those units, right? So you're showing, hey, tenant, your rent is $1,200. All of the rents around here are $1,600, $1,700, whatever. What do you think would be fair? That's the magic words. What do you think would be fair? If the tenant sees that your best option is to kick them out, rehab the property and rent it for $1,600 or $1,700, then they're not going to suggest that it stays the same. They're not. I've never had them go, oh, well, if average is 16, let's go to 16, right? They're not stupid. They want to get a good deal. I don't want to kick them out. So consistently, it's been like, as an owner, you would go, I'm going to raise the rent $50 or $100 and be called a jerk. Probably cause a tenant turnover. They hate it when you raise the rent. I hated it when I rented for those 2 years. I rented 2 different apartments. I moved to the apartments because that one raised the rent. When they raise the rent, it sucks. But I go to the tenants and I say, look, here is what you would pay if you rented something in the area like this. I don't expect the rents to go up this high, but here's what you're paying. Here's what I paid for the property. My expenses are more than what the owner was paying when you set the rents 5 or 10 years ago. What do you think would be fair? I've never had a tenant say keep it the same. One time I did have a tenant. I've had tenants suggest an increase that was too much, and then I scale it back like the $500 and something dollars. And I said, let's go with $400. $400 is good. I'm happy. You get a good deal. We're all good. Because I was thinking 150 would be great, right? So that tenant is ecstatic, is happy, and stays, and still tells their friends about the time their landlord said, let's keep the rent lower. So it's not always about making every penny you can. It's about getting the biggest rent increase while keeping the tenant happy. Happy tenants don't trash your property. Happy tenants don't leave. So very little tenant turnover, and they don't trash the properties. One time I did have a tenant suggest an increase that wasn't very much. And it's a conversation. It's not like, okay, what do you think would be fair? Whatever they say, you're just going to go with, right? They suggested it, and I said, okay, so you're suggesting this much of an increase. And that's not bad, but do you see how far you are away from what the rentals are here? And then they suggested a second number. So it was a negotiation. I didn't twist their arm. I didn't say, well, if you don't go higher, I'm going to kick you out. I just said, I'm asking you what you think is fair. And that sounds really fair for you. And so, yes, you can second volley it and say, see how far you are from the average, right? And I'm not expecting us to go all the way there. And that was the one time that the second time came in with a higher number. So it's possible, but I haven't had anybody yet go, yep. You could have tenants say, well, we were going to move, we're going to buy a place. I've hoped for that. I have a triplex is what I call it, but it's a house and a duplex on one property. So one of them is an ADU. I was hoping the people in the house would move out. I wanted to try short-term rental, and I don't want to do it with my small multifamily because I don't want like a revolving door next to a permanent tenant or a long-term tenant. So I was thinking if the house emptied, I'll try Airbnb or Vrbo or something and make videos about it, right? That'd be great. And then the tenant said, well, we would like to do like a 28% rent increase. Would you please raise our rent this many hundreds of dollars? And I was like, I guess that sucks. I'm going to make more money. So I don't currently have any short-term rentals. And okay, definition of B and C may be fuzzy based on the market each of us are in. It's all fuzzy. I guarantee there are some people that would look at my properties and go, that's in the D neighborhood. I'd never live there. And to me, it's the borderline of being C to B, because it just depends on what your background is. I know it's not a war zone. I feel safe there. I've never had, it doesn't mean that break-ins means the type of neighborhood, because I think the better the neighborhood, the more likely to break in, because the better stuff you have to take. But I can go outside safely. The tenants can go outside safely. Cops come there one at a time. So to me, it's not a D, but other people would associate it with a D. It's very subjective. That's the word. Nalair. Howdy. Ray from Puyallup here. Nice. Hopefully see you with the next Tacoma FI meetup. So Facebook group Tacoma FI. And we meet second Tuesday of the month, which is not today. I think it's 2 weeks from now. But it would be great to see you there. Adam, thought about putting more money down since interest rates are higher. You've already financially free and could relax on maximizing yield for more stability. So yes, but your last statement is the backwards version of what I was thinking. So yes, I've thought about putting more money down. Don't compare year 12 to year 1. In the beginning, I think the best improvement to your portfolio is adding cash flowing assets that will appreciate, experience principal pay down. So I'm not saying don't focus on cash flow. It better be cash flow positive. Don't buy an alligator. Yeah, that's a property that loses money right out of the book, one rental at a time. Once you reach freedom, financial freedom, not independence, but freedom. And I'm going to be making a video next week called the 4X rule. So this is a little teaser on that. But the reason why I chose 4 times my freedom number before I pulled the plug and retired was, you're right, you can slow down and relax. Now, if you're Matt the Lumberjack Landlord or Millennial Mike or Michael Zuber, and you're trying to grow, well, not trying, growing massive portfolios that continue to grow themselves. Yes, recycling capital, doing a cash out, HELOC, second mortgage, whatever you're doing to pull the equity out and put it to work, sell 1031, you're growing your portfolio. That's the most important thing. To me, I like the idea of putting more money down. I did 5% down on my first one. I could have used a VA loan and done 0 down. Ever since then, I've done 20 or 25% down on every property because I like having a better equity position, but it lowers your yield. So this is where I was talking about the ending statement. Maximizing yield would be putting the least amount down. The more money you put into a deal, the better your cash flow is, but the lower your yield becomes. There might be a 1 in a million chance that that's not the math on how that works, but for every deal I've ever looked at, every single one so far, the more money you put in, your cash on cash return goes down. But financial stability comes from having equity, being able to handle a rent decrease, which has never happened, as you heard at the beginning of the video, since we started tracking the data. I've actually considered, and I almost don't want to say this because I'm trying to talk to people who are primarily trying to grow a portfolio in the first or maybe 5th deal, right? This is more of a thought for somebody who is retired, who has quit their W-2, might add a rental just because the money piles up and you got to put it somewhere, right? I've considered buying all cash and getting a terrible yield just for cash flow, because I've talked about, I have 16 rental units on 7 properties, right? So I might sell a property, pay off some mortgages, and have more cash flow with less things to deal with. I'm hesitant to say this again, because when you're starting out, that's a dumb thought. When you have 0 assets, you're not going to sell an asset to buy one, right? But when you have enough to where you have more than 4 times what it costs you to live and trying to spend the money it costs you to live, the number of assets that you have becomes less important than the cash flow. I'm not going to do anything I just said, but I've had the thoughts. So I'm trying to be as transparent as possible, saying, yes, at some point, when you have enough cash flow coming in, and I am very transparent, Peter, if you're still here and you're still new to my channel, I absolutely share all of the numbers. I'm small enough to where I still think it's achievable and a goal for pursuing. There are people who have portfolios that are so large where if they shared their numbers, people would think I can never do that. So they don't, and I totally get the mentality. But with 16 rental units, the cash flow after principal, interest, taxes, insurance, setting aside for repairs, maintenance, and vacancy, this year, unless nobody pays December's rent, is going to be $203,000. significantly more than I thought it was going to be. That's more than I live on. I don't know that I've ever spent more than $40,000 in a year house hacking, because no mortgage. Take the mortgage out. Like, I'm still living in a unit of my fourplex, right? So I don't have rent or mortgage. So it's challenging to do. And I've tried everything this year. So I retired in July. I've tried cruises, renting Sea-Doos, renting quads, side by sides. Took a trip to California. Like all this stuff, and the money still keeps piling up. So I'm probably going to add properties, but I've had the thoughts of, what if I just bought all cash? I'd be adding less properties to deal with, increasing cash flow, but my yield's going to be like 3%. Like, it's terrible because I put more money down. All net or hider. So it comes back to screening tenants for ones that will actually go and look for another job and not just give up. True, which is a lot. Well, I don't know if it's easier. My experience has been that it's been easier with Class C. Like, I have a tenant, her rent is $1,460. Was working, making 19 an hour or something, I think. I try not to, because I never ask about income, but I do ask if they have a job to check to see if they're going to be honest with me. And she quit her job and went to work at like a daycare or something. Just like went out, just got a job the next day, making enough to cover the rent. That's been my experience. Rob, howdy. Another class of people. Well, ask my age. There's a typo in there that my brain's not processing. Sorry, Rob. Oh, class by age. Yep. And then Peter here asked, how long have I been in real estate? Ninja Vanish, howdy. Jenin, howdy. Let me know if I said that right. Sorry. Welcome to the channel. I found your channel a week ago, and I like that you cut to the chase and make it clear. Thank you. That's my goal. And there was a question there that I missed, and I'll get to that question too. It has to be information I would want to take in. Like, I love Graham Stephan 2017 to 2019. Like, that couple of years, he'd just go, here's a 10-minute video. Here's what I'm going to talk about. Here's how you can apply it. Like, it was great. And then he got big and he got into reacting to videos and all this kind of stuff. Still, once in a while, he'll drop a video that's on like money mindset or real estate, and I watch it just like everybody else. And so I'm trying to do what the viewer wants more than what I want. So I do have some long content like this on Tuesdays. I'll do a couple of hours, and so some people will never click on a 2-hour video. So I will do the thing where at the beginning, where I'm starting to try to remember, hit record, do that. I'll pull that first 10 minutes out, put it in a separate video. But most of my videos are just 10 minutes long. YouTube at some point is coming out with courses. I'm probably going to put together like the videos that are more, less interview, less questions, more just direct. This is how I would invest. This is the steps I would take, and just put it into a classroom format. So thank you for that. That's my goal. I have two goals. One confuses people. First, be short and simple, get to the point, talk about what the thumbnail talks about. So like, no clickbait, don't drag it out forever. Don't talk more than 5 minutes, but literally just do that. And then the second thing is to make it look unprofessional. Bad editing. I try to get the sound right, but I don't want you to think that you have to be super tech or have, Mr. Personality to survive in real estate. Like, lumberjack landlord dropped out in the 9th grade. Both Millennial Mike and I worked in law enforcement. Like, we're not investor type people, but we're able to make work completely optional by investing in real estate. And you don't have to be really good at video editing for that. So I'm going to get to your question, and then I'm going to get to the super chat here. What did you do after being an officer? So I was laid off in 2008 because during a recession, everyone knows there's no more crime and we don't need cops anymore. Sarcasm aside, municipalities' tax revenue goes down when companies aren't producing, so they have to lay off police departments. It happens almost every recession. So I got laid off at the same time as a bunch of qualified officers. Up until 2018, it was the longest I'd ever gone in my life without a job. It took 9 days to find a driving job for Oak Harbor Freight Lines, where I doubled my income. Worked there for about 8 months. They went on strike. I was making $115,000 in that 8 months. great benefits, great schedule. Everything was perfect. And the doofuses went on. They haven't even resolved the strike yet. So that's been over a decade. I haven't signed an NDA when I worked there, so I still talk about that. But then I found a truck driving school here in Washington State called Commercial Driver Services at the time. Went to work there as an instructor, started at $17 an hour. And over the period of the next year and a half, slowly demoted myself down all the way down to president of the company. And I grew the company from 6 staff to 60, one location to 5. First few years, I made $17, $18, $19, and 48,000 salary. And then eventually the last couple of years, I actually made decent 6-figure money because I grew the company so big. But that's been my last 12 years, was working at the CDL school. I still have side hustles. I talk about them in some videos too. I teach people. I don't sell things in World of Warcraft anymore. That's a way I just stay in touch with friends and family that are at a distance. And I like to player versus player murder somebody that's in Korea and make them get all mad. But I still do side hustles like expert witness testimony, get on Expert Institute's list of what industries you've worked in. I've worked in law enforcement, military, and truck driving. So I'll testify in courses and provide expert opinion on accident, hours of service, FMCSA regulation, and make a couple $1,000s for maybe 30 minutes work sometimes, just to do a review and then a little write-up on what my opinion is. So I did that along the way. And I talk about the first step to getting into real estate is figuring out how to save. And the first step to saving is figuring out how to increase your income. So then there's a bunch of steps after that, which I have videos on called the 6 steps to getting started in real estate. Let me get to, I see we got Tom, Dividend Daves. And then I see we had a member, Esther, you joined. Thank you. Welcome to the membership only club. So you'll see videos pop up on YouTube and they'll say members only. We do them on Fridays. I'm trying to do at least 2 a month. Sometimes there might be more, and I might just do randomly some other times of the week because they will stay up for members after that. And it's been literally like, here's the mentality for it. I would like to just share this info and give it to everybody, right? But I'm trying to grow a YouTube channel. The more I can grow this YouTube channel, the more people can get information that can literally make work optional. And here's the mantra. The average person can make work optional in 10 years or less, even if you're not starting from the best position, right? I fully believe that because I was in a bad position and did it. And it wasn't anything special. All my deals are from the MLS, all traditional lending, while not making a lot of money, while being a single parent raising 3 kids, right? It was just like, I think this is something a lot of people should be trying for. So growing a YouTube channel, you have to make a video. Like there's a structure. They have a thing called a click-through rate. When you see the thumbnail, if you click through it, if 100 people see it and 10 click through, you have a 10% click-through rate. The higher the click-through rate is, the more people it shows it to. Then the longer someone watches the video, the more people it shows it to. And at the end of the video, if you click on the video that takes you to another video, it continues the view duration, right? So it's like there's this math to YouTube. But I want to share things like the nuts and bolts of how to do it. I'm going to open an email from my agent and go, look, here's a property they've sent me. And here's you guys saw, if you're members, you saw there was like 50 in the last 2 days when we did the video. I open one, I look at the list, I go through, I say, this is the neighborhood it's in. Here's how I would run the math. Here's what I consider about the layout of the property. Super boring, right? If you're watching my channel right now and you popped into this live stream and you see somebody reached financial freedom, they're answering every single question that comes up. I'm going to watch this, right? That I totally get that. But if you popped in and you saw some old guy with gray in his beard looking at his emails, you would click out, right? So for the average regular YouTube video, I can't do that content. It would kill my channel. But members who are investors, who understand, okay, on Friday, this Friday, it's going to be literally, we're going to build a binder. We're going to make a binder for somebody in the Zoom channel. So someone in the Zoom is going to volunteer to, and if no one does, I'll do my own, but I'm hoping somebody will say, yep, let's do one for mine and we'll make a binder for you. We'll literally look at the screenshots you should use. We'll go through. It'll be super boring for somebody who doesn't know my content. But for the members that are going to be making a binder and getting their tenants to ask them to raise the rent, that's gold. So welcome to the channel, Esther. I appreciate you joining. 000. Howdy. Respect and gratitude for sharing your knowledge and experience with us. No question, just an offering to the algorithm. Well, thank you very much. I appreciate that. That is very awesome of you. And thanks for saying no question, because I've sometimes seen a super chat and the question was above or below it and I missed it. So I appreciate that. 000. Amafid, howdy. Terrible yield and amazing cash flow. Sign me up. Yeah. So I wouldn't have wanted to start with that. Like, I totally get some people are Dave Ramsey fans, and he has for me, he has 3 good steps. First 2, last one. I think everybody should do those. The ones in the middle, not so much for an investor, right? So he's got great information if you're going to need to get out of bad debt. Totally get it. But the premise of saving up cash and buying a property, or saving up the biggest down payment you can when you could just get on the property ladder, start house hacking, reduce or eliminate your largest expense the soonest way possible. I wouldn't make that recommendation for year 1 or 2. Year 12, at financial freedom, it's an option. Let me go back up here. I just want to make sure I'm not missing any of the super chats and those kind of things. And if I ever miss a question, throw it back in there and I'll get into it. Peter, I'm a StarCraft guy back in the day. Me too. Because Warcraft, before World of Warcraft, was like StarCraft. Tower construct kind of stuff. Layer, vanilla WoW player, people know, thanks. Theta Hedge Capital, howdy. Had Warcraft back in the Windows 98 days. Yeah, I played EverQuest back then. Buddies, howdy. All-Nighter Hider. I'm a macro nerd, not a gaming nerd. Thanks for the monumental sacrifice. Buddies, recommendations on who to follow to get into small commercial real estate. Small commercial real estate. So go through the mental checklist. Investing out of state. Millennial Mike. Self-managing and doing rehabs, lumberjack landlord. The only person I follow that would do commercial I would go to Michael Zuber from One Rental at a Time, because just before 2008, he pivoted when he used the affordability index, which is not a good metric to use right now and actually has a flaw. I have a video on my channel where I was on a CD when I did the video. When I was staying at Beth's cabin. Zuber pivoted by selling single family houses because the affordability index was so low that it meant very few people could afford the average house, which meant prices were really high. And he switched into commercial. He's looking at possibly doing that again as the affordability index gets bad now. And more importantly, because he's smarter than me, he's doing it because the lending structure for commercial right now, with rates doing what they are and the market softening, is going to be where the most pain is, and he's going to benefit from that. The affordability index flaw, so you don't have to go watch the video if you're watching this right now, is that it takes the average income of a population and the median income and the median home price and says, this is how many people can afford it based on those 2 metrics. Working remotely and at a distance has completely changed the landscape, and we are a year or 2 behind tax records even showing who lives where and makes what. So the affordability index right now is kind of flawed in most markets. So I wouldn't use that as the metric to decide whether you're going to pivot into one asset class or another. But Zuber's doing it based on other metrics. So I would go to One Rental at a Time, Michael Zuber, and take in his content. He just had a book come out called 15 Conversations with Real Estate Millionaires, which is way over there. I narrated it for Audible. So I don't think my voice is great, but I think my voice is better than a robot. And he had his first book narrated by a robot through Amazon. I'm about a third of the way through. I need to find the time to finish narrating his book, One Rental at a Time. I'm doing that next. But his content, he does a daily update. It's great. I watch it every day. Alyssa, howdy. Excuse me for a second. Make sure I'm not muted. Okay. All-Nighter Hider, question. What's the R value of 3/8 carpet pad? I just tripled it up to insulate my door. True story. I'm not sure the R value of carpet. It does have airspace, which is what makes the temperature work. That's a good question. You could also just use money, just pile money in there too. Rob, also class by type of people are in the neighborhoods. Yes, but type of people, so type of workers, how many homeowners versus renters. I mean, there's a whole bunch of metrics to look at there too. All-Nighter Hider. Buddies, Cody and Christian Multifamily Strategies is a good channel. It's a great channel. Are they doing small commercial? Because they have over 100. Yeah, they have some. They do some larger 24 or 30 units, but they do have a lot of sixplexes. So it's residential commercial. I don't know if, other than right now they have a resort that they just bought, a 20-unit resort. So Christian and Cody, multifamily strategy here on YouTube. You can find them there too. Ninja Vanish. Played Dark Age of Camelot before WoW. I had access to beta WoW, but back then I realized it was best for me to just say no to MMORPG. They're too addicting. Yeah, for me, I used it as a source of income from 2004 to 2010. 1997, because it was Ultima Online, then EverQuest, then World of Warcraft. And also I was a single parent, so I was able to have a hobby where I had 2 computers set up where I could play with my kids. And my kids learned to type because it wasn't all voice backs then. So I tricked my kids into learning how to type by playing the game. And it was a type of child labor where if they did 1 hour's worth of resource gathering in the game, which I would then sell, they could then play the game. Yeah, that's a special place in hell for me, I'm sure. Buddies, please share tips on negotiating with MLS listing that haven't sold for more than 2 weeks. The missing metric from the question is what was average on the market in your area before now. So my preference is to find the property that, so for the last 2 years, if anybody's new to my channel, for the last 2 years, speed has been your friend. Interest rates were going down, prices were going up, things would sell really quick. So you wanted to get an offer in before the seller knew they were about to get inundated with multiple offers, over asking, waiving contingencies, offering to name their kid after the seller, like, and they didn't even get the deal. Like all of these things, you had to be in fast, hoping to find the seller that was just, oh, we got close to what we wanted, or a little over or a little under or whatever, and they accepted your deal. And then you have the sunk cost theory that even if they got a better offer later, they're going to stick with yours. That shifted when interest rates went up so fast. Buyer demand pulled back. Prices haven't dropped. We're up 11% year over year, and we're up 0.1% since last month, or whatever the metric was, the most recent metric. So prices are still up. They're not as high as 14% that we were at the peak, but they're at 11% year over year. So they're still up. So waiting didn't save any money for anybody that was going to invest. But what's starting to pile up now is days on market. And if somebody listed their property because prices went so high and they think, well, if I get that amount, of course I'm going to sell my property. Why wouldn't I? But it's not selling. Most sellers are just going to keep the property, turn it into a rental, or take it off the market, right? So you're just not going to make the deal. But if somebody is a motivated seller, a divorce, death in the family, moving, already purchased there, they're doing a reverse 1031, whatever their motivation for having to sell is, they might be more likely to accept a lower offer, an embarrassingly lower offer. If I would say you've been days on market or at least 3 times what was normal a couple months ago. So in my area, a property would be listed and under contract in a few hours. So for me, if it was 2 or 3 days, I was starting to make lower offers. My last property, I made asking price offer at about the 4-day mark, and it was accepted. Now, I would probably wait till the 10 or 15-day mark and then make an 80% offer. But that's my area. Zuber, where he invests in Fresno, California, is doing, he doesn't look at anything that hasn't been on the market for 30 days. And he's closed on one deal, he's closing on another one on December 6th. So he's finding deals by waiting until they've been on the market for 30 days and then making an offer that makes sense to his numbers, not the numbers of the seller. Rob, you should have switched all light switches to Disney princesses instead. No, we switched it for about 20 minutes until Doofus was gone, and then we put it back on there. Rob, I'm buying B class, but I'm going nurse midterm rentals. Good, as long as it would cash flow. If you had to go long-term rental, generally nurse should be safe. The demand is there. If you're around hospitals and that there's enough of a per diem to make the nurses attracted to coming there, as long as you're not in an HOA or somebody who could take away short-term rental options or rental options. Yeah, class B. And there's nothing wrong with going class A, B, or C, or D. There are people who successfully invest in all 4 categories. Here are in this video at the beginning, 3 reasons, 2 that everybody talks about, 1 that I thought of this time, reasons why class C works for me. Make sure I saw a super chat down here. I missed a question from Amafid. Making sure I didn't. Matt, the lumberjack landlord. Lumberjack landlord owns 10 commercial small units and no carpet pad, has basically zero R value either. Good answer. Better than me just saying put money in the door. Don't want to lose where I was at here. Okay. Buddies, please share your thoughts on ways to invest passively in real estate without investing in a syndication. REITs, partner, be the money partner. Note buying. So those are the three that come to mind. For note buying, there's actually a secondary note community. Like, I don't know what it's called, but it's like BiggerPockets, but there's like, they have conventions and everybody gets together on buying note and selling notes. Yeah. So those are the three that would come to mind. So not syndication. REITs, basically buying stocks in real estate. Notes, buying the financial instrument itself. Or partnering with somebody where they do all the work, they find the deal, they manage the properties, you just provide the money. I believe Ashley Kerr, the host of the Real Estate Rookie podcast, kind of does that. Like, to start, she was the do everything person and she had the money person. So there you go. Lauren, howdy. Hi from Tacoma. Jason, howdy. Anyone have any advice on getting a Class A woman on a Class D budget? Be funny, be tall, be temporary. And this is why I don't give relationship advice. Investing done simple. Howdy, great name. Hi, Dion. The gas was turned off for one of my tenants didn't pay. It is starting to get cold at night. Worst case, if my pipes freeze and repairs need to be made, would I take it out of their deposit? I don't think you're going to take pipes freezing out of tenant's deposit. You can take steps at, winterizing, making sure there's no exposed pipes. I had my triplex. I had to go and actually I didn't do it. I'm too lazy. Built a housing for an exposed pipe that was insulated. Make sure there's nothing like that. Also, do you live in like Washington State or Siberia? I mean, New Hampshire, where depending on the time of the year, you can have massive temperature swings. But I don't think you can have pipes freezing. You can, in some areas, you can tell tenants. I have to ask the lumberjack landlord, what do you do in an extremely bad area if the tenants won't heat the place? Because if the gas is off, are they using space heaters? Are there other sources of heat? And I've had actually an argument with somebody recently about, I want to have gas heat in my property in case the power ever goes out, my tenants don't freeze. And I'm like, okay, so what gas heat are you installing that is all mechanical and doesn't have a thermostat, doesn't have something that runs on electric to turn it on or off, to where if the power's out, you still lose the gas heat. So make sure you're putting in the right system if that's what you're doing that for. That is a great question. Investing done simple for the lumberjack landlord who might give an answer here, or he might answer your question Sunday morning, 11:30 a.m. Pacific or Eastern, 8:30 a.m. Pacific, where he does a live stream like this and answers all questions. Since he lives in a climate like this, all my tenants have baseboard heat. And there's a couple with fireplaces, we just boarded them over. So we don't, I have one that has gas heat. And I don't know anything about it, except every time I call for a repair or anything, it's $500 plus whatever happens. So I don't want them here. Janelle Diaz, howdy. Hope you're doing well. It's great meeting you at the One Rental at a Time official in-person meetup a couple weeks ago now. Gano, howdy. I look for Class B turnkey since my time is very limited with my restaurant business. Yep, good. So I kind of do turnkey too. There's two types of turnkey. There's turnkey where I buy a property that needs no work and there's already a tenant in place. I wait a couple months, I use the binder strategy to get rents where I want them to be. So to me, that's turnkey. The other version of turnkey is where you hire a turnkey company to find your property, maybe manage your property after you close. And it's a lot less work than even what I do. Duchess. No. Laura. howdy. Hope you're doing well. Duchess, Section 8 renters can't have income more than 80% of the area median, right? Honestly, don't know. I know that there's an income requirement, and it generally has to be fixed income. So disability, retirement, pension, something like that. Not necessarily low income, but definitely below median income, unless I am greatly misinformed in my research. So yes, they do have to have lower than median, and it's probably even more than 80%. Lumberjack might know this because he's the math guy that knows the numbers. I don't. I just know that I call the housing authority. They know who's approved. Those approved tenants apply to move into my place. Sometimes when you have a Section 8 tenant and one of the kids grows up and moves out, they no longer qualify for the amount that they used to, because it's based on household head count as well. But I have Section 8 tenants that have an 831 credit score. That was like 3 years ago. It's gone up since then. So fixed income it's very different than low income, but you're right. Yeah. So, and then there is an income requirement maximum for that too. I don't know what it is though. Alec, howdy. Brock, howdy. Good evening. Should I avoid using same homeowner's insurance for all my properties in case of a claim, or is that usually a requirement for the umbrella? That's exactly what my answer was going to be. The umbrella policy could require that any properties that are covered by the umbrella use their policy. Mine actually also requires vehicle insurance to go through them too, and have a higher threshold than the state minimum. So check with your umbrella policy, but yes, I would do that. And all of my properties are through one insurance, but I do shop every time I add one, and I let them see what I'm getting offers from to make sure I'm getting competitive rates, just like I would with any other contractor. As I go, here's what your competition is doing. Here's what you need to do to beat it. I use Stillwater Insurance through Geico. So that's all my insurance goes through them currently. I check every time for a better rate, and a better rate doesn't always mean just it's cheaper for me. It means better coverage, more. I want the highest deductible possible. So if one only, because every now and then Stillwater only has a $5,000 deductible, I like to have 10,000, because I'm never going to use homeowners insurance unless it's a massive claim. Because this happened before I was an investor in 2006. Well, it resolved. Yeah, it was 2006. Neighbor's tree took out 2 windows and sliding glass door. I replaced sliding glass door with French door. That was on me, so I paid for that. But insurance paid for the windows. It was like $1,300. No one else would insure me for 5 years, so I had to stay with my insurance company that I had from 6 to 11, and my rates tripled. So no one would insure me, and my rates tripled for a $1,300 claim. Since then, I just keep big reserves. If there's anything that's going to break, I mean, it would have to be $30,000, $40,000, $50,000 before I want to even touch insurance, because of the impact it's going to have for me on all my properties for the next 5 years. So that's a good question. But your umbrella policy is probably going to be the thing that dictates what you have to do. Gina, thank you. Lori, howdy from Alabama. Nice. Dividend Dave. Dion's Bigger Pocket episode was got me interested in real estate investing, because it is the lazy person's guide to financial freedom. Which Dividend, I don't think you're lazy, but we'll work on it. Aldair, howdy from Boston. Nice, close to Lumberjack. Buddies, is it worth being an accredited investor? Does the designation help you? So it's not like you get on a list somewhere and say that you're an accredited investor. There probably is a list somewhere that you could get on. It's the people who are trying to find investors for their deal can only advertise to accredited investors. So once people find out you are one, like doing a BiggerPockets episode, all of a sudden you start getting all these emails for syndications, and you have to be an accredited investor to invest with them. So my stupid thing always tells me to put ads in, but I don't put ads in. So we're okay. That doesn't mean I won't be talking about things for 30 seconds every now and then, things that I like. Like I talk about Hemline because I use it. I talked about the Ridge wallet because they sent me one. I didn't say good things about it, so they didn't send me another. Is it worth being an accredited investor? It's worth getting to that point because you have $1 million net worth, or you make $250,000 a year, and it might be different if you're a couple, but that's what I remember. It wasn't a goal of mine to have a big net worth. Actually, I didn't know I had $1 million net worth until I did a video on what do I think came first, $1 million net worth or $1 million in debt. And that video is still on here. And actually both things happened in the same day on the same transaction. Are you trying to invest in syndications, partnered deals, or things where being an accredited investor would matter? Then yes, you want to make the designation so that you can invest in certain properties or deals. I don't have any partnerships. I don't do any syndications. Kindergarten simple. All of my properties are from the MLS, traditional lending, like keep it simple. But that's me. So if your goal is to do things that would require that, then yes, I think it was something to pursue. Jason, any thoughts on attempting to get a multifamily through Neighborhood Assistance Corporation of America? Honestly, no. You said any thoughts? Why is that on sound? On attempting to get a multifamily through, no, all my deals are from the MLS, traditional lending. I've never had a wholesaler bring me a deal that was worth looking at. I've had them since I had a YouTube channel. A lot of them bring me deals that I laugh at, and I think, "Oh, you're showing me this because you think I'm stupid," and you'd be embarrassed if you put this on the MLS because it's way too overpriced. So I don't know anything about their program, and there's probably other programs out there like that you can use too. But for me, it's very simple. It's the lazy way of investing. I have 3 agents with auto searches set up. I look at my emails. I find the deal that's going to cash flow in the area where I know the market. And I use the binder strategy to get the rents where I want them. And I just kind of rinse and repeat, super simple. Are you having absolutely no luck finding deals on the MLS that would cash flow, that would get the yield you want? And does theirs meet those? Will you get the cash flow that you need? Will you get the yield that you need? Do you qualify for what their program requires? Does it have an income requirement? Does it have an ethnicity requirement? Does it have, how many hoops do you have to jump through to get to where that would be a deal worth doing? Cody, howdy. Millennial Mike, but not today. The Yoder, howdy. Watching while canning venison. Nice. Nalayer, yes, already signed up for the meetup in Tacoma FI and emailed you. Awesome. I think your email is different than your name. Matthew, howdy, present. Theo, howdy, catching another Tuesday live. Awesomeness. Rob, if I need help spending money, just buy a boat. That'll do it. I have looked at buying a boat. Actually, if I found 3 or 4, I would have bought. I can't find a slip. I want to do a liveaboard and then rent out the unit that I'm in. This would easily cover the cost. It's a 2 to 10 year wait for all the marinas around here that I've found, but I would absolutely buy a boat. There's actually a couple of YouTube channels on liveaboard that I've watched on things you can do to make living on the boat better. Chester, 203K, that's only 4 Fabergé eggs and a souped up Kawasaki. Exactly. Theo, any thoughts on buying stocks if prices dip in 2023? Here's my thoughts on stocks. There's basically 3 ways to reach financial freedom. Start and grow a business with the intent of growing it to the point where somebody else can run the day-to-day. Invest in stocks and understand whether you're going to be a dividend investor or a diversified index fund investor and use the 4% rule, or invest in real estate. Warren Buffett often talks about making sure you diversify, right? And the average millionaire has 7 sources of income. And Kevin O'Leary, Mr. Wonderful, talks about having no more than 20% in one asset class and no more than 5% in one asset. For wealthy people, makes total sense. Once you're financially free, and I believe even for more financially free than I am, to diversify to protect your wealth. To get there, Charlie Munger, Warren Buffett's kind of partner for decades, actually says diversifying is stupid. If you diversify, you'll never get there. If you chase 5 rabbits, you'll starve. This is the kind of version I like to go with. But if you're just doing all of these different things and you're spreading your money out and you're trying to learn different strategies, gaining actual wealth in an abbreviated amount of time is very challenging. I am 100% in real estate. No 401k, no Roth, no stocks. I wouldn't own stocks. If somebody gave them to me, I would sell them, put the money to work in real estate, emptied out my retirement accounts in 2020 because luckily I was affected by COVID, which you can't say on YouTube without getting demonetized. And I have like $11,000 in that retirement account because I always continue to do the match. So I do suggest do the match, right? Get the free money. But January 2023, since I don't have any W-2 income that year, I'm going to pull that money out, pay the taxes, put the money to work in rentals. So for me, on any thoughts? No. If stocks dropped to free, I don't think I would sign up on the roster that said I owned them for free, because it's not my asset class. If you invest in stocks, dollar cost averaging would be what I recommend. I do a version of dollar cost averaging in real estate. So dollar cost averaging, uneducated, uneloquent, probably incorrect. Take a set amount of money on a recurring date, weekly, monthly, biweekly, whatever, that you consistently buy the same index fund or the same stocks, so that when prices go up, you're buying less, and when prices go down, you're buying more. So it doesn't matter what's happening with the market. Dollar cost average would be what I suggest. Several studies have been quoted as saying that's traditionally the people who perform the most, the best. My dollar cost averaging for real estate is I save the down payment. As I save the down payment, more and more options open. So I can buy more expensive properties. I can try a different thing like a BRRRR where I do all the financing. But as I save that amount of money, all of those options open. So it's not quite on a set timeline. But as I'm saving, I'm looking for deals. And when I find a great deal, I buy it. I don't think when the market does this in 6 months, I'm going to buy. When the market does this in a year, I'm going to buy. Or I better buy now because the market. Don't think any of that. I think as I have the money, as it piles up, and I'm looking for the great deal. When I find the great deal, I buy it. Right. So I'm not timing the market. I'm not waiting for rates or prices to do anything. I'm using my money that I have saved as I save each month for the next great deal. So my thoughts on stocks: if it's your asset class, dollar cost average. Don't worry about stocks going up or down. Diversify. I don't think stock pickers do very well, but it's not my asset, so I'm making stuff up. Don't listen to me. Real estate is my thing, and so that would be my thoughts. Great question, because not everybody here buys real estate or is ever even going to own real estate. But financial freedom, getting to your freedom number, understanding that work can be optional from the three different, there's probably other paths too. Those are the three main ones, the business, stocks, or real estate. Find the one that excites you. We are more likely to stick to a plan we are emotionally invested in, because there's going to be challenges. Real estate is going to have setbacks. Stocks is going to have setbacks. Your business is going to have setbacks. But if it's exciting, if you look forward to doing it, I drive around every time. I'm like, ooh, look at that duplex. Wonder how much money I can make with that as I drive by, right? That excites me. Buying Bitcoin when it was $2 a coin doesn't excite me. People play this mental game of, oh, I wish I bought $1,000 of Amazon in 2002 because it'd be worth $7 million right now. Or that's not the right math, but they say something like that. If you bought it for $1,000 in 2002, you probably would have sold it for $5,000 and said you almost tripled your money, and then watched it keep going up, right? So I don't play those kind of mental games. Yeah, there are multiple ways to do it, but those are the three main ones that we talk about. Cody, make sure I'm not missing any. There's super chats. Moy, Diane. Howdy, Moy. Thank you very much for that. On point with content as always. Thank you. And I'm making sure, Moy, I'm not missing a question. Because if you'll take the time to do a super chat, like $2, you don't realize how much. I don't need $2, but you don't know how much it means to me that somebody's saying, hey, algorithm, somebody likes this content, share it with someone else. I want to make sure I don't miss a question. Okay. Cody, let's say you only have $50,000 only, and most people can't afford a $400 expense without going into more bad debt, and we only have $50,000 in this scenario. So good start, I like it. You are working with a seller to buy a deal, seller finance, but not guaranteed. Would you continue to look at other deals with intent to purchase and possibly pass on a deal? What is your exit strategy with the seller, and are you under contract? Do you have earnest money at risk? And what could you be costing the seller by taking their time if you're the one who backs out? So there's like a lot of, what was that? Extreme of consciousness thought that just happened out loud right there. I'm always looking for more deals, because let's say that an amazing deal popped up and you had $5,000 in earnest money with this seller, but the other deal was so good, you'd absolutely be willing to walk away from $5,000 to make the other deal happen. Why not be looking always, right? But not guaranteed. I guess, how much time are you committing to this? One of the main reasons I don't do foreclosures or short sales is because how much time you tie money up with a bank. It can take a couple of years for them to figure out what they're going to do while they're gathering information on what offers look like for this property, so they decide what to do. Yeah, I would continue to look. I would only leave for a deal that was good enough that justified whatever I was going to lose with that seller. And it could be the reputation, or not reputation, relationship with that seller that you lose. So you might end up having to maybe give them some money and say, look, hey, look, I've wasted your time, but I found this deal I want to pursue. And so here's the earnest money, and just walk away from it. Or are you in your inspection period where you can walk away without it? I guess I would need more details on why it's taking so long. Laura, with another thing. Keith, howdy. Yeah, I second. Gina, thanks. Tom Klein, oops, I forgot to click like. Nice. Every time you hit the like button, all-nighter hider, somebody does retire before Matt. Roberto, how do we become members? Thank you for asking, because it's actually kind of confusing. I think there's a glitch with YouTube. On certain devices, when you're looking at the video, right underneath the picture above the chat, there's a box that says join. You'd have to close down the live chat to see it. And for some people, it's not there. So in that instance, some people have gone over to their laptop or their PC and opened up YouTube and clicked join there. So it depends on the device. I don't know if it's an Apple or a Android or whatever thing, but it seems to be a glitch in YouTube. Bill, howdy. Chester, the members only live stream should be at 4 p.m. I have an alarm set. I'm gonna early Friday, I'm gonna make the post, put it up at for 4, and so 4 p.m. Pacific, kind of like the Tuesdays, 4 p.m. Pacific. Trying to be fair to the people on the West Coast and not do it too early, so they have time to either listen to it on the way home, but I'm trying not to make it at like 9 o'clock at night or 10 o'clock at night on the East Coast. Lori, howdy. My real estate is different. I do tax deed. Awesome. I have bought one empty and one with someone in it. In the process of getting them out, I own free and clear. My goal is to get 1 to 2 houses a year. So if you're doing tax deed, free and clear, 1 to 2 a year, that's amazing. I almost cussed. That's awesome. That's stellar. Sounds like you're killing it. Keep it up. The really cool thing with real estate, and the reason I like being a part of the REI Avengers with, Zuber, Matt, Lumberjack, and Millennial Mike, we're all doing it different. Like, I don't own anything out of state. That's what Millennial Mike does. He house hacks in an expensive area, but he's investing at a distance. Matt does all his rehabs and runs all his crews. I don't do any of that. Like, my entire week, this week, this is what unless I get a call with an emergency from a tenant, which can happen, right? I have an exterior motion sensor light that I'm going to replace. So light's probably going to cost me $38. It's 2 wires, right? Maybe a ground. I could totally go do it. It's on the place where I'm at. I'm probably going to call the handyman and happily pay him for an easy job, so he doesn't think I only call him when it's like, hey, I need you to crawl in the crawl space and get out the bees or whatever sucks, right? This is an easy thing. Yeah. There's no one right way to do this, but there's a one right way for you. So if you found that with buying tax properties and doing all full paid with no mortgages, and it's working for you, that's amazing. Elise, howdy. How do we become, okay, so yeah, you might have to change, I think a few people had to change devices on how to become members. Chester, I bet Matt might make a guest appearance in about 5 minutes. We are doing on Lumberjack Landlord's channel a live stream on Friday like this, where we both answer questions. So I don't know that we picked the time, and it really depends on my nap schedule as a retired person. I mean, no, Matt's got a job. We got to work around that too, but yeah, that's not important. Naps matter. Cody, thoughts on moving up members live stream to noon? 62. So I did a poll, and I got a bunch of emails. Like people, Cody didn't want to put in here what their reason was, but I got a bunch of emails asking for after 3 p.m. Pacific. I don't know what it was, and some of them were East Coast. So right now it's 4, but it is on a replay. So if you can't make it, I totally understand. They won't always be at 4. I'll try to move them around. I'll probably do 1 in the morning, and have the next time or something. And they won't always be on Friday. I'm going to bounce them around. And then Rob deleted a message to make me lose sleep forever and ever and wonder what was said. Lumberjack, you're good. Lumberjack owns small commercial. I own 4. Yeah, I think I got to that already. Played Ultima Online myself, but quit when Counter-Strike hit. John, Texas, howdy. And that was Rob. Nice. I made so much money on Ultima Online as a real estate broker. It was a game where you played a fantasy character. You had an avatar and you went around, you killed things, you collect things, whatever, but you could build a house. You had to collect the resources, buy the deed, find the plot of land on the map that actually supported the type of structure you were looking to do and put it down. There was limited land. So I would build houses. I sold a castle for $1,400. So 1,400 American US dollars in my account because of a virtual castle that didn't exist. And about 3 months after I sold the castle, they duplicated the servers. So Trammell was the world where, and then Pharrell was the other world, and one was like you could fight players and one you couldn't. But all of a sudden there's twice as much land. And guess what happened to properties? That's why investing in the metaverse for real estate is kind of a mistake, because I think servers can pop up and change the landscape in any minute. Real estate related segue into gaming there. I think I was defensible on that one. John, Texas, howdy. Can you go through your tenant search and screening process through the apartment's website? Do you use their leases? Do you use their premium service? Thanks. So I'm no longer on apartments. I am using Hemlane. I have my own leases, which I got from the Washington State Landlord Tenant Resource page, which is no longer there. BiggerPockets Pro, as long as you have more than a 3-month membership, has leases for each state written by attorneys. I would probably use apartments, but the one thing I would add to any lease, no matter the source that you get it, don't ask me for a lease unless you live in Washington State. If you live outside of Washington State, my lease isn't going to help you at all. But here's the one thing I would do if you're going to use a lease on tenants, wherever you got it from. In your area, find a good eviction attorney. Not that you're going to have to go through an eviction. 12 years of investing, never done an eviction. Should have been the first year, didn't, because stupid, but never done an eviction, right? So I found an eviction attorney, and this is actually some advice I got from my brother, who is a very successful investor who has 10 paid off rentals and retired at the age of 50. I didn't retire until the age of 52, so he's doing better than me. He's also way more skilled at like craftsman, handyman stuff, and he's not lazy. So he's got all kinds of things going for him that I don't. But he suggested going to the attorney who could possibly ever someday represent you during an eviction and ask that attorney, I retained the attorney. So I've got that mental stress of, what happens if you have a leak? You have to find a plumber, call a plumber, stress, freak out, right? No, before you have a plumbing issue, you go online, you find plumbing services in your area, you read reviews, try to get their contact information for 24-hour emergency service, find out their rates, and already have the number stored in your phone. So when you have this emergency, you call the plumber. Have the eviction attorney retained. Could be anywhere from $200 to $1,500, depending on the attorney. Could be more, I don't know. Your experience is going to be yours. Mine was, I think it was $1,000 retainer. Might have been $1,500. It's been a while now. Haven't used them. They still have the money sitting there in a retainer fee. Ask them, what verbiage, what paragraph or a couple of paragraphs would you like in the lease that will make your job easier if we end up going through a eviction in this county? They're going to know the layout of that court system, what works in your county and state. And so the information they give you, add that to your lease. That to me is the most important thing. Like, you might want to add no water beds, but sometimes you don't think that's very important. But if you go to the attorney, you will know exactly what to add. And can I go through my tenant search and screening processes through your apartment's website? John, that's going to be very boring. I'll try to see if I can put together a video on how I screen tenants. I think I have. There's a video on my channel called Tenant Screening 101, and I think in very many views. So I try not to make videos again on subjects, even with a deeper dive on things where people just didn't click on it. I'll probably do a poll and see if members want a video on tenant screening and literally opening up and going, this is how I would screen tenants and what I put in here. But I don't know that I'll make a video on that. Again, other than you can find the one that says Tenant Screening 101 on the channel already. Chester, at least look for a join button somewhere. Yeah, so it's not that, Chester. It's on some devices, it's just not there. Laura, howdy. Your thoughts on letting a new tenant to move in a couple of days before the lease contract starting day. Lease contract December 1st. The PM send is okay. I am concerned about liability. Have they signed the lease? Have they paid, and will they prorate the days? You can break down the month literally by dividing it by how many days there are in a month. You can prorate. You can be really nice and say, like, just move in on the 28th and start paying the 1st, as long as the lease is signed and I have the deposits. I've done that in the past. If it's significantly more, like a week or more, a couple things. One, they have to have utilities in their name before they move in. So they have to do that before the day they move in, not the day of the lease. And two, if it's more than like 3 or 4 days, I would prorate the days and have them pay for the rent to do that. Yeah, moving is tricky. So you put yourself in the shoes of the tenant. It's one of the reasons why I like the binder. What tenant has ever got a chance to be in the conversation to set their rents, right? That's why the tenants are happy at the end of the conversation. Even though the rent went up, they're still happy. But if you think if you're the tenant and you have to be out of your property by November 30th, like, you've got to be out, but you can't be into your new place till December 1st. There's no overlap. What do? Load everything up in a moving van, which is probably going to take 3 or 4 trips, right? So you don't have one to load it in, and then stay at a hotel for the night for that overlap day. But if you have a landlord who will let you come in a couple of days early, like I said, if it's more than 3 or 4 days, I'd probably prorate and charge per day. But giving them a chance 2 or 3 days, depending on the weather, you're in Florida, so that's not a thing. But making sure that they have the opportunity to get their stuff moved on a relaxed schedule, I think starts the relationship better. And I don't think there's any liability to me as long as the lease is signed and the cashier's check type deposits are already made, so that they can't take the funds back and they can't move in and then not pay. So I hope that helps. And then Tom talks about, if you can't find the join button, try from your phone or computer, because there were several people that had to do that. Monica, howdy. Have you ever got a property from a foreclosure? I have not. All of my deals are from the MLS with traditional lending, not foreclosure. My auto search with my agents is actually set up as, these are the 2 counties I invest in. There used to be a cost threshold, but that went away after 2 years of investing, because as long as you've saved up a down payment, you could buy the next property. There's no limit based on income. Debt to income ratio gets a lot easier to handle after 2 years. Let me know in the comments if you need an explanation on that. But my search criteria says these are all things I want, right? But it also says no HOA, no foreclosure, no short sale, because of the time it takes to find and close on those deals. I'm super lazy. I just want to find the deal on the MLS, make the offer, do the inspection, decide to close or not, and then buy or not buy the property. That doesn't mean foreclosures aren't the way to do it. And foreclosures in 2010, 2009, when there were millions happening, probably a great way to do it, because banks were trying to get it off their books and people were literally losing money. A foreclosure now, when properties have equity, doesn't generally mean you're going to get a better price than a property listed on the MLS. It means it's a bank forced sale in a small supply situation. So if you can find them, I would do a foreclosure. I would do a short sale if I had a timeline on when it would close. But I don't want to tie my money up in a commitment in a deal that could take up to 2 years for the bank to figure out if they're even going to sell it. All-nighter hider. Did you get that, Lumberjack? I used carpet and pad for insulation just because I had it, and it's in San Diego, so you don't need insulation. You need sound insulation, maybe. There you go. Real career, young money. Howdy. Tyler Cable is really good for commercial as well. Tyler Cable, so that must be a channel on commercial. Nice. REI Stoners, howdy. Thanks for making it. Make sure I'm not missing any other super chats. There we go. Tom Kine. Our 1 hour phone call went well. Next time I'm going to pay you 10 grand for a whole day. What would it take to get a day with me? It's not money. Get married, Tom. Worst reason ever. I'll show up in a pirate suit, spend the whole day with you. Chester, resource gathering for hours on end has a name. No lifing or something like that. Yeah, no life. I won the No Life Award, and they call it grinding. So that's why I think Engineers do really good at real estate because everything is systematic. They literally systemize the thought process of buying a real estate. So I get that. Gamers do good at real estate because we are willing to grind for weeks to get one little tiny thing that means nothing in our life, like real estate. 50 tech, 50-ish. Howdy, I'm in a high cost of living area and would need to fix up my house to sell it in order to house hack. Would it make more sense to take out a home equity line of credit and buy my first duplex in a low cost of living area out of state? I'm in California. Great question. Thank you. Welcome to the channel. Haven't seen your name before. So if you've been lurking for a while, thanks for being here. California is a big state. A lot of people would say it's a very high cost of living area, and Michael Zuber would say you know investing in Sacramento might not make sense, right? So he invests in Sacramento. I grew up in LA, and I would say investing in LA sometimes might not make sense. LA County's big, has a big area, right? So my brother invests in Kern County, Rosemont, literally middle of nowhere. But the prices versus rents means cash on cash return is good. So it could be possible to buy in California, just maybe not in an area that you've been thinking of. I don't like the in-state income tax and some other restrictive rules that happen in California. So maybe there's other reasons other than high cost of living area for you to invest somewhere else. But I do think, especially the way you worded your question, you might have watched some of my content. House hacking in a high cost of living area is more important than house hacking in a low cost of living area. Because if you can house hack in Seattle like Millennial Mike does near Seattle, he's not insane and doesn't live in Seattle, but he lives around there, and he's saving a couple $1,000s, probably between $2,000 and $3,000 a month living for free in a house hack. Or he invests in Gary, Indiana, where rents can be $800 to $1,200, and if you house hack and live absolutely for free, you're saving $1,000, right? Bigger difference to house hack in a higher cost of living area. So I would focus on that. There are things you can do with your property. So you mentioned fix it up to sell, so then you would be 1031ing into something else to house hack. You've lived there, so you probably wouldn't need to, because you'd have the IRS 121 rule where you can profit up to $250,000 in capital gains without paying taxes, up to $500,000 if you're married. So maybe you have some other options there. So I'm going to go through a list, but then tell you that there's a question that happens before this entire list. So the first thing is, if you sell, what would you do with the gains? Do you qualify? Have you lived there for 2 out of the last 5 years to qualify for the gains? How much would you have to spend on fixing up? All that kind of stuff. What money would be left to invest? Second, home equity line of credit. Do you have the ability to pay it off in an abbreviated amount of time, short, like 2 to 8 years, so that you get it before things change with home equity line of credits, like adjustable rates or the 10-year lock-in rate or whatever that you've got? If you're going to do a refinance, what's your current interest rate? Because if you don't want to impact a 3 or 3.5% interest rate that you got in the last couple of years because you refinanced when rates were super low, then you get a second mortgage. So the first mortgage stays the same. Now you have a second mortgage at a worse interest rate. So you have that money to put to work. So those are like, you could sell, HELOC, refi, or second refi to pull your money out to put it to work, right? But the question that happens before that entire list is always, do you have a place to deploy those funds to get a deal that the income is justified the loss of when the sale or the added debt on the existing assets? So you have to add the expense of the home equity line of credit or the refi to the purchase of the new property. And I don't mean, I think I have a deal I could do. I mean, you have a deal. You probably will get your offer accepted at the amount that you need to do. You're confident in your ability to do that before you do any of that. So I don't recommend putting your primary residence at risk on your first deal. This tends to be when we make most of our mistakes. You don't know how to screen tenants yet. You don't know how to find tenants, find a lease, find contractors, build a handyman, learn the neighborhoods you would or wouldn't invest in. It's like all these things you need to learn. What if you lose money and then you lose your house? So I wouldn't put your retirement accounts at risk. I wouldn't self-direct. I wouldn't borrow against them on your first or second deal. But by your third or fourth deal, when you start to have a reasonable expectation with confidence on what your yield is going to be, what the experience is going to be like, what your burn rate is, how much reserves you need, how often you might have in a vacancy. I mean, all the things you need to learn about your market come after those 2 or 3 deals. Then maybe put your equity in your own house at risk, which I have never done. Lumberjack Landlord and Michael Zuber have done everything we talked about. Home equity line of credit, sale, cash out refinance, second, probably portfolio loans, like all the ways that you can recycle capital. So they grew bigger portfolios. They didn't start right away with that. It was 3rd or 4th deal by the time they got to doing that. My brother had a paid off property that he lived in, took out a home equity line of credit, bought a property, spent 3 months fixing it, did all the work himself pretty much, except for the stuff that would require like in the electric panel or whatever. Probably cheated. I said that online. That's great. And then he focused and paid off the home equity line of credit, rinsed and repeated till he had 10 paid off rentals, right? So he had a strategy where that worked for him. But he was running a tree service. He knew he would make the money to pay off the home equity line of credit. I didn't have I was underwater on my house when I started. I messed up. I messed up so bad in the beginning. I tried to give the house away. So like that first deal can go so bad, you might not want to do those risky things. But I would definitely consider house hacking in that cost of living area. And that's either selling and buying one or doing the fix-ups that it takes in your property to make it worth a version of house hacking that works for you. So for me, since I had young kids and was a single parent, I did house hack my way through the police academy by renting out a room to a young couple that I trusted to basically be live-in daycare for my kids and live rent-free. But I wouldn't do that with strangers, right? I wouldn't want to rent out rooms while I had young kids. But a duplex or a house with a separated basement that's built out as an apartment, or a house with an ADU, like there's all kinds of options, especially if you have to stay in your high cost of living area. You can save more money house hacking there than by relocating. And then if you were going to invest at a distance, what market would you pick? Where do you have somebody who lives there, knows the market, knows the neighborhoods, who you trust so well that you think they will be at your funeral? Yeah, there's a whole if-then statement logic process that you need to go through there to figure out what to do. But keep the questions coming, and we'll see if we can get you to the one that works for you. Tom. Our phone call was good because I could use it to hold myself accountable. Nice. Chester Williams to Tom Kahn. Glad you mentioned the word accountable. I think we all need an accountability buddy. Yeah, so I don't know if you watch Joe Kuhn. He retired at 54. He's been retired for 4 years. He mostly invests in stocks. He's not a real estate guy. He uses the bucket method. And I watch his stuff because I retired this year and I had no idea how that was going to go. So I started watching content on how that would go. And he talks about having a retirement group. Like every Friday, he talks with other people who are younger than retirement age, who have retired, that what are they doing? So kind of like an accountability buddy group system. For me, it's the three amigos and the REI vendors. I'm steel sharpens steel to steal, the lumberjack landlord phrase that I've heard him use. I'm around guys who talk real estate, even if it's on Zoom. And some of us have met in person now. But this group, where people communicate this way and you're interacting with each other with the terminology of investing and financial freedom and celebrating the wins, understanding the losses, and that's huge because some of us and me don't have that in our personal lives. My brother invested, but had 13 kids, right? That's it. My sister Allison has a rental now. She's a traveling nurse and turned one of her houses into a rental. So she's got one. Does anybody else have rentals? Right. And then I was the president of the truck driving school with 5 locations and 60 staff. In 10 years, out of 60 staff over 10 years, two invested. Dan, who's been on my channel and retired a few months, he retired in August, a month after me, 42 days after me. Not that I've ever rubbed that in his face every time I see him. Met for lunch today. I missed an opportunity. That's it. Like nobody talks this kind of stuff. So this is as important to me as I hope it is to all of us to interact together. Exactly, Chester. So maybe, Tom, you need to find a local REI meetup, kind of like Tacoma FI, but in your area. REI Stoner, Salomnia. Words lost all meaning. Now you're hungry. Anybody know what the map behind me is from? Because it's a different map than I usually have. All-nighter hider would have, but pad was on hand already, and that's not important spot. Yep. Chester, you saw it. See, it says a new map. You guys are noticing it. Matt the Lumberjack Landlord got me one time during a live by asking me which place I'd rather invest in on my other map, which have I ever shown the studio? Would I give everybody motion sickness if I just said, hey, I've got both maps set up? So in the studio here. and 7 gaming monitors and 2 VR headsets, but 2. There's one missing. Where the hell is it? And I gave everyone motion sickness by moving the camera. Very sorry. Flash of light. Howdy. Another X-Wow Vanilla Burning Crusade player here looking for best in slot real estate investment. Yes, I used the best in slot one time and min-maxing and didn't realize that I was talking to people who might not have understood that. Limited partner, money partner, be confident. There you go. Chester to Lumberjack. Has it snowed there in Northeast yet, or is it only really cold up there? It snowed here today in Washington. We've got snow all day. I'm not going to give you motion sickness again and show you out the window. I think it started to rain, so the snow's probably going away. When Millennial Mike was visiting Lumberjack Landlord in Siberia, they're doing a video and it's going like this because Mike is shaking. So he puts it up against the wall and then it does this. So Matt, thank you so much for the invitation. I will definitely be coming to see you. Let me know when the weather isn't deadly. Saranthus, howdy. As far as I know, gas heat still uses electricity since it is automated and integrated into the AC system. Yes, small snows a couple times. Nice. Esther. Any advice? How do you find out the rent record of existing tenant in the process acquiring rental property? So it doesn't inherit non-paying tenants. I am currently looking for C property. Okay. One, I never trust the leases that the tenants, that the agents provide me. I want to see rent deposit slips. But what matters to me most is what is area average rents. I calculate about 10% lower than that, and I figure that's where rents are going to be. When you're buying, you always run the risk of getting a non-paying tenant and having to go through an eviction, especially if you buy from a property where they've been renting to a family member, and they'll even show you rent deposits, but that person decides they don't want to pay you because you're not the family member. So it's always a risk when you buy that somebody could just become a non-paying tenant. Are you investing in Los Angeles where they still have an eviction moratorium going? Do you have the reserves to handle a few months if it takes to go through an eviction? To protect yourself the most that you can, get copies of leases, so at least they have to lie if they're going to. Second, ask to see the rent rolls, the deposits of the rents for the last 3 to 6 months. And even just a screenshot would work. That's what I've done. I've been comfortable with that. I thought one time that I had purchased a property that ended up having both sides of the duplex not paying. So first property, that could really suck. I saw rent rolls, I saw deposits, I saw leases, purchased property, closed, and it was like on a holiday. It was in May. So whatever holidays in May, and it wasn't Mother's Day, it was something else. I went to introduce myself. So I was there for the inspection and the tenants kind of interacted, but didn't talk too much. And then after that, I went to do the landlord introduction letter, which I give saying, here, I'm the new owner. Make sure you don't pay the old owner. Here's how you pay me. Here's how you contact me. And then if possible, I have the conversation where I explain the 3 words they're allowed to use. If they're going to come up in a conversation, these are the 3 words where they would call me. Everything else should be a text or an email. So that's kind of how my tenant acquisition goes. And they weren't there, but the cars were there, and they wouldn't answer the door, and they wouldn't answer the phone. Like everything told me, okay, I've got 2 non-paying tenants, but it was like a 4-day weekend, and they were just both gone. So 3 people, but both sides were gone. And then showed up Tuesday and haven't had any problems with them since. So even I've thought that that was a possibility. So have reserves, maybe have an eviction attorney on retainer, find out what the timeline is for your area. Yeah, that's how that goes for me. Angelina, I am currently saving for my next purchase. Would it be a good idea for me to keep doing the work and looking at properties, even though I won't be able to purchase for maybe a year from now? Thank you. So if your work is 15 to 20 minutes a day, absolutely. If it's 5 hours a day and dominating your life, don't. But if you're doing the work, how would you see a property on the MLS that said seller financing is an option that could be the deal that you want if you're not looking? And if you're going to wait a year, that it's worst case, let's say you took the year and you just didn't look at anything. Then you jump back in the year. It's going to take you 60 to 90 days to figure out what a good deal is, what yield is, what rents are doing. So I do the work all the time. Even though, so my last purchase was May of 2021. I have saved up astronomically crazy numbers that I couldn't imagine 10 years ago, but money for the next deal. So I've looked at maybe call cash, maybe a BRRRR that I provide the money instead of hard money, or a larger fourplex where I do the down payment. Like there's all these things that I've considered while I'm saving, but I'm still looking every day. I've made offers. Some offers had one accepted, and I need to make the video on why I backed out of that deal. But I would keep doing the work, because you might see the deal that pops up that how much money you have is irrelevant to that being such a great deal. You find a way to make it work. You won't see it unless you're doing the work. And it doesn't cost your agents anything to maintain the auto searches sending you the deals. So maybe I wouldn't be driving for dollars. I wouldn't be sending mailers. I wouldn't be doing any of the creative ways of finding deals if you know you're not going to buy it for a year. But I would still be looking at your auto searches and just kind of watching what's going on in our area. What are the trends? What's happening with rents? If I wasn't watching rents in the end of 2020, normally what I do is I purchase a property, and about 2 months later, once I've decided this is a tenant worth keeping, I'll do the binder strategy and get rents where I want it. Once rents are where I want it, I'll do a 5% increase every other year. So that historically worked great from like 2013 till 2020. 2020, we had all of the problems that happened that you can't mention or you get demonetized. And in 2021, I did the binder strategy with every single tenant across the board, because 5% would have been ridiculous if I didn't. So even if I wasn't looking at buying a property, but I was watching and I was like, wow, rents have gone up 20, 30, 40% in the areas that I invest. I need to do the binder strategy with existing tenants. I wouldn't have known that unless I was doing the work, even though from May of 2021 on, I was probably October before I had enough money for a down payment for the next property of 2021. And then since then, I've just continued to save. Yeah. So my suggestion, keep looking, even if it's just 5-10 minutes a day, just kind of keep an eye on what's going on. And the lumberjack says, ask for an estoppel, right? That's so your documents from seller, which will tell you what the rents are. Oliver, howdy. And thank you for that answer, Matt. I appreciate it. That was probably the word I was searching for. Glad I made it to today's live. I'm glad you made it too. Thank you. Tom, do you use Class A and B rentals for your binder strategy? Yes. So I don't have any Class A or B, but I've helped people who have them use the strategy there. I have not seen a time where it doesn't help to educate the tenants. Here's what's going on with rents in the area. Here's where you are. Here's what my value of the property is. So that's going to base my property taxes and insurance expenses. What do you think is fair? I don't think it's even limited to residential. I think it would work with if you had commercial. You're basically just saying, here's the comps. Let's talk. Boy. Trying to reply to Jason C. Don't quote me on this, but I had the assumption that when you buy through the NACA program, you cannot purchase any more properties for 5 years minimum, not investor friendly. Good. So know the hoops that you need to jump through. Yes, the super chat was for the algorithm. Thank you, Moy. So that was perfect. And then Esther and Cody took back messages to make me lose sleep forever and ever. How do you get a Zoom link? So here's what will happen on the members only live chats on Fridays, or on this Friday, Tom. I will upload the video as a members only. We will start the video, and then the very first comment is going to be the Zoom link. That way, it's too hard to be in the video, emailing back and forth with people, and I don't have a 10-year-old around here to set up the tech any way better. So you'll just copy and paste the Zoom link to show up. There you go. Zuber said disrespectful, and I don't know if he got disrespectful or embarrassing from Bet something. I forget the guy's name. Which is weird. There's another guy that has a large channel that says disrespectful offers. Bet Davis. If you're new to my channel, I have memory issues from Desert Storm, and that's why I generally don't want to do live streams, is because every now and then, and I've said this before, so some people say, Oh, I forgot. Hey, I had to pick my kids up at soccer today. I'm the guy who goes, I have kids? What? Laura, please don't change the Member Friday chat. Yeah, so for now, that's the current plan. Chester, Tom, I want to say he quoted a guy named Patrick Bet David. To the rescue. Thank you, Chester. Tom. Yep, can never figure out how to spell his name or say his name or remember his name. So Freudian slip, almost said divorce and say, I almost did. Good catch. I was thinking of something super negative that made my life way better. You know, like when an eviction would be over. Elise, howdy. Would you consider buying a primary residence now, or would you rent for 6 to 12 months and hope for deals and rates to go down? Thinking of making market like Florida that has pretty high demand. Thanks. So that is a great question, Elise, and I want to be as transparent as I am. I'm an investor that buys rentals. I purchased a home as a home buyer around 2000 when I, buy the house with the white picket fence to raise the kids before being an investor. So most of my content isn't intended for the home buyer. Okay, so I'm being as transparent as possible. I'm talking about people who want to turn properties into income. But with that being said, I would never try to time the market. In 6 to 12 months, interest rates can be 10 to 13%. And if interest rates go up, I want everybody to listen to this very carefully. So do prices. If interest rates go up, you're going to hear a lot of content creators say, every time interest rates go up 1%, home prices come down 10%. It's like a mantra that they repeat because the math kind of makes sense. But that's not what happens. If interest rates go up 1%, home buying power goes down 10%. So a lot of buyers will be priced out. A lot of investors will be priced out because we can't get the yield we want. So what happens is we have what we do right now, a crash in transactions. The number of deals that will happen will go down. We are up year over year 11%. So this time last year, a friend of mine closed on a duplex, and I made a video on my channel. Her deal or my deal was she paid $555, I paid $298, and her deal was better because her interest rate was around 3%. They're around 6% now, 7%, right? For investors, and who knows what's going to happen right now. So we've doubled the interest rates. They've gone up over 300 basis points. So each point is 100 basis points. They've gone up 3 points, right? So if we go with the math that they've said of every time interest rates go up a point, buying goes down 10%. Price goes down 10%. This is the proof that it's not true. We've gone up 300 basis points and we are up 11%. The last time interest rates doubled was in the 1970s. Michael Zuber from One Rental at a Time has a 52-year spreadsheet where he shows all kinds of data and he has the sources for the data in the spreadsheet. Offers it free on his One Rental at a Time website. Interest rates doubled, home prices almost tripled. But transactions crashed. Transactions this year are crashing. Like we've done, like it was 48% less deals or something just in the Seattle area, the last metric I saw there. So we've definitely seen a massive crash in transactions, but we're not seeing a crash in prices. At the peak, we went up 14% year over year. And then it dropped to 7% year over year because we have seasonality in real estate. So everybody said, oh, it's crashed 50%. Well, we're only 7% higher instead of 14. So it's 50% of the increase, not a decrease. It's of the increase. So we're up 11% year over year now. The last month, it went up 0.1%. So it's still on the rise, even though interest rates have gone up. They do cycle because banks lend on margin. So whatever the Fed rate is doesn't make what margin. So if it goes, Fed rate was 3 and it goes to 4, that doesn't mean we're going to go from 6 to 7. It means how much lending fear is there. The more lending fear there is, the bigger they make the margin. When the Fed raises the rates and lenders see CPI rate come down, so the core index, the inflation numbers on whether you're the provider, you're the C or the P, CPI or PPI goes down and seems more stable, lending fear got less. So even though the Fed had raised rates, we saw compression of the margin and rates came down. So if you're a home buyer, and this is from my heart, I'm telling you, so I buy in for investing. Anyone who waits will pay more. If interest rates come down, this is not the opposite where buying power goes down. If interest rates come down, buying power goes up and prices go up because people can afford to pay a higher payment when the interest rate comes down. So in almost any scenario that we see, it's going to cost you more. You're going to have 6 to 12 months worth of rent. You're not going to have 6 to 12 months worth of appreciation or principal pay down. Who knows what's going to happen with rents, with rates. So you are going to be taking a huge gamble. So there are some YouTube channels that do what we call fear porn. Every single video is, here's the reason why it's going to crash. Here's the reason why you should wait. They get a lot of views, at least because some people are looking for a reason to be happy that they're not doing anything. I actually see comments where people say, I'm so glad I didn't buy a house last year. Look what happened to interest rates. They've doubled. Literally meaning that person doesn't understand how interest rates work. Yeah, they've doubled. Prices have gone up. So they've gained 11% in appreciation. You've had a principal pay down. You have a rate locked in from last year. So if interest rates right now are 6 or 7% and you buy it, and then in 6 months or 12 months, interest rates are 10 or 12, you're going to be like, oh, thank goodness I purchased last year. If they go down to 3 or 4%, because it's possible that we have another reason why we have 2020 interest rates, then you refinance. So your home purchase, and I talked about this kind of early on in the video. I do a version of dollar cost averaging with real estate. So in stocks, dollar cost averaging, and I probably butcher this every time because I'm not a stock guy. But you take a set amount of money and on a recurring timeline, every week, every month, every paycheck, whatever, you buy a certain amount of stocks with the same amount of money. So when prices go up with stocks, you're buying less. And when prices go down, you're buying more. So it's dollar cost averaging, one of the most consistently successful ways to invest in stocks. I do a version of that with real estate. I save the money for the down payment. And I consistently look for a great deal. When I find the great deal, I buy the great deal. Now, this year's an exception. There have been 2 times where so it's November, so it's a year, not this year, but a year's worth, 2 deals that I would have bought. I helped 2 friends buy a duplex and then a triplex. Both cases, I told the people, if you don't like this deal, if it doesn't work out, you want to back out, keep track of how much money you've spent because I'll give you exactly how much you have into it and I'll buy it from you. That's how good the deals were. I would buy them from them, probably pay them more, but they've worked out. They're both cash flowing. One's closed recently, so I don't know yet, but everything went really well. The other one closed last November, and she's killing it. It's like a 34% cash on cash. It was a screaming deal on the MLS, traditional lending. So with the caveat that I'm not a home buyer, I hope that advice helps you. I'm not saying buy now because you don't know, and I'm not saying wait. I'm saying when you have saved the down payment and you find a good or great deal, that's when you buy. It doesn't mean you might search for 6 to 12 months until you find the great deal. But if you're not looking every day, you're not going to see it when it pops up. And do you think anything can happen in Florida that would make demand go down? Do you think all of a sudden they're going to vote a different color? Do you think that the 2 hurricanes that happened in the last month and all the destruction that they did, you think they're all of a sudden going to build 3 times as many houses in the next year? You think people are going to move out because they just hate the warm weather? I don't think demand is going to go anywhere. And if it did, let's say prices dipped 10%. So $500,000 house, you're not going to get it for $450,000. So if you say $50,000 in purchase, spread out over 30 years. If prices came down, where are rent? Where are rates? What have you spent on rent between now and then? And if prices come down, what kind of competition is there going to be? Like all of those things. So I haven't heard yet of a market condition that would say you should wait. There are life events. How stable is your job? How stable is your relationship? Are your kids in the 5th grade or 6th grade and about to go to a different type of school district, and the school in your area of the next age bracket is when you don't want your kids to go to? Like there's all kinds of personal reasons where you might say I need to wait. When I went through my divorce and found out about $89,000 in bad debt in my name that I didn't know about, probably the wrong time to buy a house or buy a rental or do anything. Like life can tell you when you need to wait. The market can't. I've not seen it. But on the flip side, I've never seen or heard of any time in history where everybody was saying this is a great time to buy real estate. In 2006, everybody was like, real estate's only going to go up, but it's expensive. And the reason it was easier to buy was because lending was so easy. You didn't have to prove income. You could borrow more than the house was worth. You could wrap closing costs into it. There's like all these things that made it easier to buy, but nobody was saying it was a good time to buy. And then the crash happened and all of everybody disappeared. Lenders wouldn't even lend. Then in 2014, we have this thing, 2013, prices are above 2008. So it's got to crash. People have been saying that since 2013. Prices didn't cause the crash. 2014, we have the silver tsunami. We have all these baby boomers that are going to retire. And then there was something every single year. 2018, we had interest rates above 6%. So every single year, there's this list of people saying, don't buy now because fear gets views. Since 2020, with the pandemic and the eviction moratorium and all of these things, and every single month, a channel that said there was going to be a 20% crash by summer, and prices kept going up, and people still watch that channel because what the hell? If I didn't buy since 2020, over half of my units were purchased after 2020, making work completely optional, being able to retire and never have to work again in my life because I was finding the next purchase, not looking for the what reason should I wait? So I really hope that helps. Lori, do you have your properties in a trust or something similar? I have a long list of reasons why none of my properties are or ever will be in an LLC. I will be using a trust. I probably need to set it up in the next year or two. A trust doesn't do anything for me. It doesn't have any kind of asset protection, doesn't have any kind of tax benefits. It is going to help my kids inherit these properties and make their lives better. So if I love my kids, I will put them in a trust. So it's debatable. I'm on the fence, working on it. So no, but lumberjack landlord has his in a trust, uses that. I mean, I have less than 10 mortgages in my name. So I also don't use hard money. So there's a lot of reasons I don't have partners. Why? There are reasons why you should have an LLC. I don't have any of those reasons in my life. But I will have my properties in a trust for inheritance purposes, not for anything that's going to benefit me. 50. What is the deal with the Friday meetings? How are you fire for a phone call? So when I first started doing YouTube, I was offering, hey, let's have a call. Let's figure out your situation. Let me try if I can help, because I'm trying to help people, right? And it turned into 15 to 20 hours a week for a lazy person who had a job, was raising kids, trying to game, and sometimes date, but intelligence and self-preservation kicks in, and I quit that crap. So I stopped taking calls, and I do live streams every Tuesday for a couple of hours. I am doing a free giveaway every now and then of, hey, for an hour of my time, I'm going to, whoever rolls, I'll roll a dice, pick somebody, and we'll do an hour. Tom did it. I've done, I think, 3 of those now in the last month where we go take an hour, and I'm probably going to be doing more of those. I don't know that I want to get paid for a phone call. That just feels weird. But giving it away and helping and answering live stuff here. I'm going to put my email in the chat. So not so much a phone call, but I answer emails. I go, what's your question? Let me look at your situation. I don't know your market. I don't know your resources. I don't know your goals, but here's my opinion of the questions you have. And the deal with the Friday things is, and 50, maybe you were not here towards the beginning of the video. So if this is a repeat for anybody, I apologize. I'm going to keep it really brief. To grow a YouTube channel, you have to kind of give out content people want to watch. So you have to have a click through. They have to see your thumbnail and click on it. Then they have to watch for a few minutes. Otherwise, YouTube thinks, if you click in and click out, YouTube thinks nobody likes it, so they don't show it to anybody else. But the longer you watch, the more people it shares. The more super chats you do, the more people it shares. The more comments you do, the more people hit the like. We're at 72 likes. That's awesome. Thank you all very much. The more YouTube thinks that this is content people can enjoy in this subset of groups of people who like finances or rentals or financial freedom, that kind of stuff. So it's going to share it with more people. I want to do videos on things that will suck, that nobody on YouTube is looking for, but people who watch this channel would love to see. How do you make a binder? Like the physical printing, what images do you pick, in what order? How are you going to talk about it? Or how do you look at your properties when you look at your rentals that come in from your agents? Like what's your stream of consciousness thought when you open it up and see it? those are the videos I think that are going to help the people that are doing this work, right? So I want to make those videos. So I do members only for Fridays. So you have to be a member of the channel. And sometimes the join button doesn't show up. So you might have to change devices, go to a PC, laptop, or your phone and find the join button and join. That way, it's only, if you don't want to watch me open my emails or open Dividend Dave's emails or make a binder, then you're not going to click on that video, right? But it's also not going to show it to a bunch of people on YouTube who click in for 30 seconds and then click out. So it doesn't give it back. It's members who will go, okay, this is the video where we're going to do this thing, and they click on it and they expect that thing. And it's only shown to people who expect that thing. So that, sorry, that wasn't brief. That's as brief as I can be. So that's what the Friday things are about. Laura, thanks. It does help. I told property management they can move on the 30th for the same exact reason that you explained, but not 4 days. Utilities still in my name, right? I would, I don't know if I'd worry too much on the utilities for 4 days. I mean, could worry about it. Yeah. And 50, you're new. Thank you. Bay Area, right across from San Francisco. Nice. So howdy, welcome to the channel. We all start out new and with a knowledge base that we need to expand. And I think if you're new to this channel, please check out One Rental at a Time with Michael Zuber, the Lumberjack Landlord, Millennial Mike. We all kind of talk together and share information on different investing strategies. And none of us think our way is right or wrong. We think our way is right for us. And then there are elements of what I do that you can use in your strategy, elements of what Lumberjack does, what Millennial Mike does, what Zuber does, kind of put it all together as an amalgamation that makes work optional in 10 years or less for pretty much anybody. Stephen, howdy. Tom, I would be happy to see a very in-depth tenant screening and selection process. Yeah, so that might be a members only thing too, because it's the super boring stuff that I don't want to make a video and put it out there, because then it tells YouTube this video sucks, nobody watches it, or the people we show it to weren't interested in it. Chester, to me, the iron sharpens iron phrase is similar to Zuber's phrase, audit your network, or maybe is it the precursor to iron sharpens iron? Yes, it's the chicken and the egg. Auditing your network is great. It doesn't mean eliminate people from your network. It means make sure there are people in your network that are doing what you want to do. Also, and I lost my chat. Keith, everyone needs to make your network accountant, lawyer, realtor, banks, and credit unions, REI, etc. There's a question mark. So kinda. My agents are in my network, but they know that they have competition and that whoever sends me the deal first is going to be the one who gets the deal. And I'm transparent and I don't take a lot of their time. I only have them set up auto searches. If I was having them show me deal after deal after deal where I was taking their afternoons to go look at a property, yes, I would sign an exclusivity agreement to protect their time, but I don't. If you have more than 10 mortgages in your name, like Lumberjack Landlord and Zuber, and soon Millennial Mike, relationship with your lender is very important, because you're going to be doing loan product. They might actually make loan product for you. I have less than 10 mortgages in my name. I do not want a relationship with my lenders. I send my lenders because they do good work, referrals, so they're happy. But every time I get a loan, so far, I take the information that the lender provides and I show it to other lenders. And I say, this is what you need to beat. And then anybody who beats it, I take it back to the original lender. And I say, this is what you need to beat to keep my business. I want them competing, because you date your lender, you marry the property, you marry the mortgage too. 10 mortgages or less in my name, I'm willing to risk the relationship with lenders to do that. And they all understand. It was actually a lender who taught me how to do that. Once I have more than 10, if I was going to, which I probably am not going to because it's not my goal, then I would develop the relationship with a lender like Matt does and get the best loan product from that lender who looks at your whole portfolio. Very different animal that way. Lawyer is in my network. Never used her, but keep her as a eviction sleep well at night account. She's already retained and her verbiage is in the lease. Yeah, accountant. I don't think he watches this, but I'm about to change accountants to a more real estate related person. So we'll see how that goes. And yes, that's in your network. I think what's most important in my network is having other investors, people who have the terminology of cash flow, yield, asset, that just understand the difference, that get the lifestyle, that understand that, yes, for 4 to 6 years, we live kind of frugally so that for the rest of our life, we never have to look at a price tag. Like, those kind of people are important in your life, instead of the people who think retirement accounts are a good thing. Like, I just don't want them in my life. So if there's somebody in my life that thinks retirement accounts are a good thing and they try to tell me constantly that they're good, I just eliminate them from my life. I don't need that in my life. All-nighter hider 50. You got to join the member area to be in the Friday members meetings. Yep, thank you. Chester, love that when the weather isn't deadly. Yeah, no kidding. Stephan, howdy. Dion, what is your opinion on mobile homes? Would you invest in this asset? I absolutely would. I haven't yet. My brother invests 7 of his 10 are mobile homes, and he does just great. There are times when it's harder to get lending on mobile homes. So lending fears dictate when they will. Currently in Washington State, they're kind of lending on mobile homes like their houses seem going for the same price. People say it's a depreciating asset, but if you maintain it, they're going to live through our lives, at least, maybe into our kids, who knows. So I absolutely would for the right deal. I've made offers on mobile homes in the past. Know your area. Know if they are a solid rental. I prefer Class C with the rents between 12. I think my lowest one right now is $1,460, but I like between $1,200 and $2,500. I don't want really above that, and I kind of don't want below that. And mobile homes would fall into that bracket for me. But if you invest in B or A, you're going to be there are B mobile home areas too, so I get it. My sister-in-law has a triple wide with like 12-foot vaulted. I mean, it's huge inside. So those do exist too. But yeah, no, I would think of mobile homes as an asset. I haven't yet, just haven't found the right deal at the right time when I had the money to make the offer. 50. All-nighter hider, thank you for the info. I see the join button. So it's a separate YouTube live on Fridays for members only. Yes, and it only happens like twice a month currently. Where the Tuesdays are every day, and then I do 2 other videos that I try to release that are like 10 to 15 minutes long. So, and the members thing's kind of new. We've only been doing it for the 2 videos so far, so it's like just started. Chester, I would also like to see an in-depth tenant screening selection. Okay. What is this no thing of which you speak, Rob? Exactly. Matthew, still waiting for my dinner invitation from Lumberjack. No kidding. Chester 50. Yep. Probably going to be wrapping up here in a little bit. So if you have any questions, make sure you get them in. What am I doing tonight? I'm going to go watch a movie. That's what's happening tonight. Todd, howdy. Question about insurance. I'm getting estimates anywhere from $100 a month to $100 door. Can you give us an idea of insurance on a 4-plex and anything in particular I should look for in a policy? Yes. So first, at a minimum, and I think this is pretty much almost all insurances, 300,000 slip fall injury coverage. I do full replacement value of the property. Some insurance companies will offer you the value of what's left on the mortgage, because you might not want to require insurance on the building, but the mortgage company will require that they are made whole. I want to be made whole if there's a burn down or something that I have to do a complete rebuild, earthquake, whatever, flood, if you're in the right state for that. My insurances, duplexes right now are between 400 and 550 duplex. Triplex is 800, 4-plex is 900, but it's 900 because I live there. That'll come down about $300 when I move out. And my single family house is like 310. So that's the kind of coverage. And then I have an umbrella policy that was $550 a year for $2 million. Now it's like $630 a year. I think $630 or $680. I forget the number, but it's 6 something for $2 million in coverage above the properties. So not quite $100 a month. This is very dependent on where you live. So an example is if you live in Florida, the elevation of your house can make your flood insurance a very different amount, literally $1,000 a month different. So each area is different. The insurance contractors mortgage, all of these are all the same to me. How do you get the best one? Get an original quote. Contact 3 competitors that also cover the same type of information. Share the quote with them and get their quote back in writing, even in just an email form, and then share that with the original provider. Because a competitor will be the first one to point out, well, look, that person's charging you $900 for a notary fee, and we're charging you $200 for our mobile notary fee. Like they're sneaking that fee, and they'll point that kind of stuff out that we might not catch if you're not working in that industry. That's just an example. There's like 13 different categories that fee can be weird in. And then they'll point out things like, oh yeah, this is great coverage, but here's the reviews on the insurance company underwriter that they're using and why you don't want to go with them. They'll point those things out. Contractor, the same thing. You had a roof. I had quotes from $7,900 to $32,000. And then I shared it all and had them all explain. I learned more about roofing from that comparison of competitors' deals than any research I probably could have done. Insurance do the same thing. To narrow down to the one in my area that had the best, and it's not the same one that my brother uses in California. He has a better coverage with a better price with a different company in California than the one I use in Washington. So it could be kind of area specific too. And then you have, do you need earthquake insurance? Do you need flood insurance, earthquake? There's something else that could be location specific too. Tornado alley, for example. Tom, insurance is also a state-to-state comparison. Exactly. Eldon, howdy. Do you compare rents per square foot when talking to tenants? That is a beautiful question. And I probably should make a video on that, because here is the Cliff Notes version of no. Square footage is a concept that owners and sellers have. I've never in my life heard a renter, a tenant, refer to square footage. We'll say things as buyers of, that's a 2-bedroom house that has 1,300 square feet. There's a 3rd bedroom in there somewhere. I haven't built it yet, right? We'll think that. Tenants think in bedroom count. Parking in Washington State, a carport will garner more rent than a garage in some areas because people don't want to use a garage door. It takes too much time and it rains, so you want to be covered where you leave your car. But carport is more. So you need to know your area, what rents for what. And you're in Scottsdale, Arizona. I think if you don't have a pool, you're probably not going to get very much rent, right? So I mean, you know the area. That's why try not to invest in 3 or 4 or 5 different markets. Try to be in 1 or 2 that you can learn, have the bandwidth to understand. Comparing rents, we look at the asset type. Is it apartment? Is it single family? Is it small multifamily? There might be a small adjustment to make for that. Does it have in-unit washer, dryer? Does it have, all of those kind of the things that we can contribute to rents going up or down aren't square footage. They just aren't. Tenants don't think that way. Section 8 doesn't even have a category for square footage. They just go, how many bedrooms? You can have a 2-bedroom here and a 2-bedroom here, but 1,000 square foot difference. And this one has a pool and a garage, and Section 8 will pay the same. Amenities aren't a factor. How many bedrooms? And Section 8, BAH, stipend for traveling nurses, all these kind of things kind of sets the rents in an area, not the size of your rental. So that was a great question. And probably worth an entire standalone video, because it's a hard concept for investors to break, because we're thinking, what's my ROI? This is a really cool thing I took from Derek, that ADU guy. He has a great YouTube channel, that ADU guy, literally the name of the channel. If you build a 600 square foot 1-bedroom ADU and you look at building a 2-bedroom 1,200 square foot, that you would think most people think, well, the 1,200 square foot 2-bedroom is going to rent better. But the ROI, the cost to make that, the papers, the permits, the materials, the per square foot cost of doing 1,200 versus 600, the yield is way higher on the smaller ADU than the larger ADU in some cases. Not a thought I would have ever had until I heard his channel talking about exactly that theory. And so it's the same with rentals. As owners, we think, I'm going to buy this place. It's how many square feet? Okay, so that's LVP flooring. That's more paint. That's all of the things we're thinking expense versus this. So if our expenses are more, our rents are more, and our expenses don't set rents. They don't actually have anything to do with rents. Here's an example of why expenses don't impact rents. And most owners think, I'm only going to raise the rent if my expenses went up. And that's ridiculous because that's not how it works. If expenses mattered at all for rents, a home that's paid off and a home with a mortgage would rent for very different amounts. Have you ever seen an apartments.com listing that said our house is paid off, so the rent is $1,000, and our house has a mortgage, so the rent is $3,000? No, neither. Right. So yes, not square footage, bedroom count, and then outside of Section 8, amenities. What type of parking does it have? Is it on street, off street? Is it a Frankenstein house where you've built out the basement, and so they have shared walls, multiple shared side, top, entrance, weird parking, like all kinds of things that could impact the rent. But it's not square footage. Tom, I like Dan's investing story. Me too. I went to lunch with him today and need to get him back on here for another video. REI Stoners. Our lender gave us a price. We qualify based on our W-2, but let's say I save a deposit for a property that's twice as much. Would I qualify to buy this? Not before you've had rental income for 2 years on your tax returns for most lenders. Once they see that you know how to find a tenant, screen a tenant, place a tenant, manage a property, they'll start looking at the rental income of the property you're purchasing, but after 2 years. Right now, your W-2 income, and it's usually your W-2 base income, they won't usually look at over time till you've had it for a couple of years to say consistently this is what they can expect to continue. Won't count. So the first 2 years is a bit of a struggle, but that's just for traditional lending, commercial loans in your name. You can, unless you're, if you're not going to house hack, you can go DSCR, asset based. There's all kinds of lending options where your income isn't a factor. Your credit score is still looked at, but they look at the income producing potential of the property sometimes before you have had rental income on your tax returns. So if you reach out to me, REI Stoners, and I will connect you with, I might have already connected you with him. I know I've connected you with Spencer, who does traditional lending, but I would connect you with Alex Chen of Certain Lending, who might talk asset based or other things to tell you if you've saved up the money for a down payment, here are other options. Might not be for a house hack, but it can give you different ways to go. And then, of course, the always fallback whenever you're looking at lending is with seller financing, there are no limits. What can you negotiate with the seller? So you have a few different options there. Greg, howdy. Patrick, Bet, David, thank you. 50 Friday chats are at 4 p.m., but then they stay on the channel for members after that too. You guys are all awesome with his name too. Evolve Properties, how many firearms in the room tonight? 2, 3, 2. Yeah, it's kind of a light day. Actually, no, I just totally lied. My gun bag is in here, so there's 5. So that doesn't count. That bag's not usually in here. It's usually in the safe. Angelina, can you show a gun on YouTube? I don't think you should show a gun on YouTube. I have the gun here that I inherited from my mom. It's a 44 Magnum, and she weighed 97 pounds. Maybe I'll end the video by showing that. We'll see. Can I get in trouble for that? You like the close-up mic talking? Thanks. I do too. I wish the mic was closer, but it also, I have a pop filter. And if I get it really close, the pop filter doesn't work. So, Carl, if the property is, howdy, Carl, thank you. If the property is really old, does that ever stop you from buying it? 50 to 120. My oldest property was built in 1921, so I have a 101-year-old property. No, I look at when were certain things updated, like plumbing, electricity. Like if I had knob and tube, that might be a deal breaker. I would look at the cost of replacing all electricity, add that to the cost to acquire. If I could still get the yield I was looking for, I'd still pursue it. So I don't have an age bracket. The biggest concern, so all of my properties except for the one old one were built after 1979. So no asbestos, no lead paint concerns. That one, you could have to do a lead-based test. You could have to deal with it. You could be more remediation involved if you have a problem there. So I consider that to add to your reserves, add to how much you set aside based on the size of your portfolio. I wouldn't want to start with that. And that's in Western Washington on the coast where really buildings weren't made until the 1900s, right? If you're investing on the East Coast, it's very common. I don't know that Matt the Lumberjack Landlord has property that's less than 100 years old. That's kind of sarcasm, but I think he said something similar to that. So yes, when was it updated and what items were not updated? How much would the cost be for me to update that? Add to the cost to acquire. Do I still get the yield I'm looking for? Okay. Let's see if I can get to any more questions here, and then I'll be wrapping this up. Price and pride. Howdy. So it's better to get in now, even though the price is still high and have negative. Oh, no, I didn't say getting with negative cash flow than it is to sit and wait and wait for higher interest rates and marginally lower purchase prices in a high cost of living area. So if you're talking house hack and negative cash flow, yes. If you move out, what would the cash flow look like? My first duplex, I paid $300 a month while living there. Once I moved out, it cash flowed originally $800. Now it's like, it's over $1,500 a month now. It's like $1,800 a month cash flow on that one. So I wouldn't buy an investment property that negatively cash flowed currently. I wouldn't buy an alligator, because what if rents go down in your market? What if your income source is interrupted? You're not saving for the next asset. I would be watching days on market and making ridiculously low offers on properties that sat longer than three times longer than normal until one stuck. So like I said, if it took 6 months or 12 months for the person who asked, should I buy a house, to buy the house, that's when you found the good deal. I'd be looking every day until then, though. I wouldn't buy now. Nobody's saying time the market, buy in a hurry, wait 6 months. I'm not saying to time it. I'm saying when you have saved the down payment and you find the great deal, you buy it. A house hack can negatively cash flow while you're living there. I have a video on my channel, how to run the numbers on a house hack. And the main thing from that video is you take out two things. First, do it like you did a down payment of 20 or 25%, because it's too easy to show a return that looks great if you do 0 down or 5 for 3% down. And two, run the numbers as if you had already moved out and all units were rented. That's the main difference between a house hack and a regular one, is you're actually just going to take out the house hack aspects of it to see if it's worth pursuing. Christopher R. Looking to buy my first duplex, upper and lower units. I would not live there, but if the numbers are good, should I still invest? Having troubles because I'm thinking of a homeowner. So I prefer to buy side-by-side units. Like I have got this list of these are the things I do to help invest and limit tenant turnover. But it's a long list, and I don't know that any of my properties nailed every single one. I want more than 10 miles apart from all my other properties. 2 of my properties are 7 miles apart. I want side-by-side units. So far, all of them are. I want washer dryer hookups in the unit. So far, all of them do. If I bought one that didn't, I would add it. But I was doing a live stream. I was one of the teaching assistants on BiggerPockets boot camps. And in one of the weeks, we were doing a thing where let's look at my emails, and we'll dig into my email. And I found a deal. It was either a duplex or a triplex. I can't remember now, but it was an over under. There were units above and below, which means not my preferred choice, because you have more noise complaints. You might have more tenant turnover, but everything else was great. It had the parking I wanted. It was in the area that I wanted. It was more than so many miles from my properties. It had in-unit washer dryer. It was separately metered. It was all of these. It just didn't have the one thing I liked. During the BiggerPockets boot camp thing, I pick up my phone, I text my agent. I was like, here's the offer I want to make. I made the offer. Ended up getting outbid because it was such a great deal. Other people found it too. But even though it wasn't the layout that I like, I still pursued it because that's part of the list. I want as many of the things on the list as I can get, but that doesn't mean all. It doesn't have to be all. Is it a good return? Is it in the area that you want to invest? Do you anticipate that with 10% below area average rents, you're going to get the yield that you're looking for? Does it check off enough of the boxes? I would still invest, but you're asking an investor, right? If you want to go and ask a channel where there's a renter who's for 2 years been saying, don't buy, everything's going to crash, and people are still watching his channel, then he'll tell you don't invest. He'll say to wait. So you have to consider the source. I know for a fact that the reason I never have to work again for the rest of my life and was able to retire this year and walk away from $2 million in golden handcuffs and 6 figures in income and not lose a bad eye of sleep is because I've been investing. There were personal things in my life that sometimes made me wait to invest, but there was never a thing in the market that made me wait. So where are you at in your personal life? And is the deal good? Tom, can you interview Todd or Melissa from Sachs Realty? I believe Lumberjack Landlord connected me with Todd, and they're super busy. Like they're booked out like a month or something. So hopefully, yes. And have you seen Sachs? Good. Lauren, where in our area are you finding cash flowing properties, Dion? I search every day and everything is an alligator. So everything is an alligator. Every property I purchased was an alligator. And everybody that looked at my deals, investors in the area, said they would never purchase mine because they're alligators based on current rents. Are you using area average rents? Do you have confidence in the binder strategy getting you to within 10% of that? And are you watching days on market and thinking you're going to make an offer that makes sense to you, Lauren, so that you know your yield will work at a certain amount and you're embarrassed because it's less than what they wanted, but you're watching days on market. And once days on market are, in this area, because you were in the same area, 10 to 15 days on market or longer, and it's starting to get to where 20 days or on market or longer might make more sense. Start making a 80%, 70% offer of what they have it listed at. Ignore list price. Watch days on market. Yeah, I've found a couple. I've been making offers, and like I said, I've got the one that was accepted and got there, and there was a list of reasons why I backed out of that one. I still need to make that video. I should take a note. I'll lose it. Tom, my interest rate has tripled since January 2021 from 2.3. John Carlos, howdy. What zip code do you prefer to invest in for the Seattle area? I wouldn't own in Seattle if someone gave it to me, or King County. So I invest in Pierce and Thurston counties. The population is not so dense that I had to narrow it down even beyond that. Like Michael Zuber picked Fresno, and then that was too much. So he went down to a couple zip codes, and he went down to like one zip code, and then he expanded out to two. Population density here is not that great. So Pierce and Thurston counties work for me. If I lived in King County, I would look at Snohomish, north or south into Pierce or Thurston. And Pierce is even getting closer to King County insanity. Here's how bad the investing is in Seattle, the area. They lost 3,000 rental units because they've made the laws so bad against rentals. So they've caused rents to go up because there's 3,000 less units to rent, increasing demand on the rentals that there are. So the laws they enacted made it cost renters more. I don't want to own in a place where literally insane people are in office. So several zip codes because these counties are kind of spread out. Tom, do you think you'll ever make a live stream as long as Pace Morby? How long is Pace Morby's? I don't know. I think 4 hours and 12 minutes is my longest so far. I'll do them as long as people will show up. Like as long as there's a question. When I was running the nonprofit for the truck driving school, I drove to Ephrata, which is a several-hour drive, to talk to 4 people for an afternoon to drive all the way back. Like I don't care how many people there are, as long as the questions keep coming, which I'm going to have to wrap up tonight. Yeah, because I'm meeting someone, and I think we're going to wrap it up there. Let me see one more. Elise, thanks, Dion. That was incredibly helpful. We bought a fourplex 2 months ago, and it seems so much easier to decide when to buy a rental, cash flow. Buying a primary is much harder. Thanks for your insights. Thank you. God, I'm glad it helped. Buying a primary is very hard because we buy based on payment, we buy based on emotion, we buy based on which way does the sun come up in the morning, like all these things that matter to us that don't matter on a rental. Rental, we look at, how attractive is this to the largest group of people? It's very different than I'm going to live there. So I hope it was helpful. Thank you. And since that wasn't a question, I'm going to go with one more. Kevin. Howdy, Kevin. What is the shortest length of time you would do a seller finance balloon loan? 0 ever, period. I will never do a balloon. I don't care if it's a 1,000-year balloon payment. I wouldn't do it. It's not my thing. There are people who have very successfully invested in real estate that do balloon payments. I don't have a working crystal ball. I have a crystal ball over there that breaks LVP if you drop it. Just saying. But it doesn't work. I have no idea what's going to happen in 5 or 10 years. So I invest for 30, I would prefer 40-year fixed rate debt, no balloon payments. And if I do seller financing, it will be for fixed rate debt. No balloon payments, no adjustable rates. And when we talk to a seller financing, a lot of times the seller first might have never heard of it before. Second, their agent might try to convince them not to do it because it's illegal, because a lot of agents think seller financing is just somebody trying to cut out the agent fees. So my introductory letter says, it's my goal to get this agent paid. My down payment is going to include the amount for agent fees. And here's all of the things that helps the seller. Here's the reason I'm wanting to do it. But you speak into existence everything that seller knows about seller financing in some cases. Sometimes they're very experienced. They have a 2,000 unit portfolio and they're selling off 5 or 10 a year just for whatever reason, and they've got a set system. Great. But you're finding the 70 to 80-year-old person who wants to step back and is finally done with this and just wants some fixed income, doesn't want to deal with tenants, toilets, termites, and you educate them on how this works. Do not say the word balloon payment. Unpopular opinion. Yeah, great question though, because I hear so many people say, "Oh yeah, I've got this blah 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 payment." Nope, not me. I sleep like a baby, and not the one that wakes up every hour screaming, right? That literally sleeps all night long like a baby, because my business comes down to never thinking about interest rates, except I watch if they go extremely low, and I might increase my cash flow. I don't care if they go up because I don't have an adjustment. I don't care if my NOI looks good at a loan reevaluation period in 7 or 10 years. I don't care about having a balloon payment or funneling cash flow to pay down so I don't have to do a gap coverage or all of those things. I know it works. I know that people successfully invest with balloon payments. That is not my strategy. Doesn't mean it doesn't work. Yeah, so good question. My answer, never. But not today. So thank you all very much for hanging out. I'm sorry I didn't get to all of the questions. You guys have a week full of awesome. Friday, I don't know the time yet, the Lumberjack Landlord on the Lumberjack Landlords channel, we will be doing a live stream like this where we answer questions. And then Lumberjack live stream is also on Sunday at 8 a.m. Pacific. You guys are all amazing and awesome, and I thank you for hanging out with me. And I forget what movie we're watching. Knives Out 2. So no spoilers. Until my next video, thanks for coming to my Dion Talk.